Good morning, students. Very good morning and welcome to another class, virtual class of audit. We'll continue with the bank audit and we'll conclude today the bank audit. Okay. So we stopped here day before yesterday. If I go back to this slide, we had been talking about the COSO framework. Whatever audit we do, because we are into risk-based audit approach, we follow generally the risk-based audit approach today. So essentially the processes are more or less same. You must have understood by now. So understanding would be very important for an auditor, an incoming auditor, a new auditor, or even for a continuing auditor before he starts the job, that the banking environment should be understood, including its internal control. Why we need to understand the environment and the internal control? Who are the people at the helm of the affairs? So once you know the people, so you get a fair bit of an idea how the bank can be run, how the bank is being run. So it depends really on the people sitting at the helm of the affairs. So understanding of the control environment means that they set the tone. They really, the senior people, the board of directors, okay, they set the tone for an organization to conduct itself. All right, this is what we are going to follow. This is what we do not want to follow. Do's and don'ts seem very lucid term. I can say some do's and don'ts. So really they set an environment that within these parameter, within these boundary, one should be conducting, whether it's a employee or a customer. All right, including the internal controls. So naturally, once they understand and once they want that we want to have this kind of a control, they put in that framework, and the framework is available today. Framework is available, so they don't have to devise all over again. Reinventing of the wheel is not required. They're available. So all they have to do is to adopt it according to their requirements and implement it, follow it, maintain it, monitor it. That all the controls that they have envisaged that these should be there are really there throughout on 24/7 basis. Because banking operations do not stop these days. The basic operations, all right, withdrawal of money, deposit of money, they don't stop. They are not restricted to 10 to 5 timing these days. So one has to be careful about that. Okay. So understanding of the business of the bank, its environment, including the internal control. So when we were talking of the environment, we have to take into consideration the various statutory requirements. Bank will have to do it. Okay, they don't have a choice. So are they have an adequate framework to ensure that the necessary statutory requirements are being followed? All right. So that needs to be documented, understood, and then documented by an auditor, whether the auditor is a new one or a continuing one. Why a continuing auditor has to do that? Because he has to see whether there has been any change from the previous, earlier year to this year. They might have gone for some new product which is allowed. So naturally that portion an auditor has to review as far as the understanding is concerned, and also to ensure that whether there has been any change internally in the operations of the existing operations. For example, whether they might have changed some system. They were working on a particular system, but they discontinued and they upgraded themselves to a different system. So definitely an auditor needs to review what kind of changes have happened, and for that, what is the impact on the operation and overall banking business. Okay. So this is what basically is understanding of the business before banking business, before an audit is taken up. Accounting processes. Accounting process, my dear students, you might say accounting processes are same. Yes, of course they are same. Any transaction there would be, it's a double entry based systems and a debit and a credit should be there. Yes, we understand that. Everybody is aware of it. But how they are initiated, at what point of time such accounting entries are taking place? Are they automated? Is there any manual intervention? If manual intervention, whether they have adequate controls in place to ensure that incorrect accounting entries are not passed. I'll give you an example. Those who have done bank audit, you will be able to relate it. If some GL code, because it's really real-time systems, but the GL updates take place at the end of the day. It doesn't necessarily mean that when a transaction is happening with a customer, whether through teller or online, it doesn't have to be. It is not necessary that the general ledgers are updated immediately, but the accounting principles that if a subledger is updated, GL should be updated too. Otherwise, the two would be out of balance, and that's not done. That's incorrect. So what it needs to update the GL balance. Here I am saying, say for example, we are some customer is withdrawing money. So it will actually hit the customer's balance, which is the subledger in this case, isn't it? You're withdrawing money from ATM. So where it is actually the accounting entry is going, it is actually hitting your subledger, that the balance is going down and the cash of the bank is also going down, right? So debit and credit is happening. But there is another aspect of it. The general ledger has to be updated. Already the total of all the savings. Suppose you're withdrawing money from the savings. It has only updated your subledger, but it has not updated the general ledger, which is the savings, total savings, the liability side. So that has to be updated. So when this ATM transaction is happening, it is not necessary that the subledger has to be updated immediately. It may not. Because you see, the turnaround time of the transaction has to be fast so that the customer is satisfied. So at the end of the day, it can very well happen that during the day when it is a process, a program is run, a batch program is run when these are updated. Now, during such update, one system, and this is done by system minded, they just, somebody initiates that program day end and system does the work at the background and you wait. The user waits till it is over and the day is changed to the next day, so that you do not pass a backdated entry. Now, while such a process is going on, the system encountered a problem that subledger code could not be identified. Where to put in that the GL ledger could not be identified. Subledger has been updated, but GL code it has to update, it could not identify. What to do? It is a machine doing, it cannot decide. So the program has been written in such a way that if such kind of an error or a situation, not an error, such kind of a situation arises, the value for that transaction or the transaction should be posted in a miscellaneous. Whatever name you call it, actually it's miscellaneous account, it should be posted. And an exception report should be generated for the HOD or whoever as per the, as per the bank's segregation of duty principles. It should be reviewed by that person and adequate action to be taken for changing the transaction so that it doesn't remain in miscellaneous account. So these are the accounting processes governed, also supported by the Act. The Banking Regulation Act today says that the amount cannot be kept in that account for more than certain amount of hours, probably 72 hours, all right, or even it could be even less. So it has to be, somebody keeps it. I have seen they're keeping it in a flush account. It is nothing. I mean, nomenclature, whatever it is. The concept behind that, the principle is that it is a unknown, balance, which is they just post it in the general ledger, some general ledger code, so that both the sides are matched, debit and credit matches, and they can close the account and move forward to the next day without matching and unmatched balance system cannot carry forward. Okay, so it has to be matched. But one has to review such, data and take corrective action. This is also supported by law. One has to do that. So as an auditor, it is important for us to understand, such kind of account balances. Normal account balances are fine. You can make out. But these kind of account balances where whole lot of data can be parked and posed. So any fraudulent with, a banking staff with fraudulent intention, if he is aware of such things, can park the, fund there and can move it and can remove it from there for a wrongful personal gain, thereby bringing in loss for the company, the bank. So one has to, as an auditor, it is our responsibility to understand the accounting process, whether, and in today's world, they are all automated. So we need to little bit understand how these accounting processes take place in a automated environment. The student may ask me that how is it possible? Do we have to learn all of these packages? No, you don't have to. Information are available in the public domain. These are big software. They are available in the public domain. And if you do not get to, get such information from the public domain, suppose you don't get, you need to sit down with the client in the bank and understand it. It is not really a good practice to just go and start auditing. We need to understand. And because in this case, ignorance can't be bliss. Ignorance is not a bliss here. Okay. Understand the risk management process. Understanding risk management process is very important. Yesterday you saw in paper, RBI is coming out with more and more circulars on this risk management, which is again guided by the Basel III committee's report, that risk management process should be there. In banking, it is kind of a zero tolerance. There is no point identifying after something has gone wrong. If the perpetrator has fled the country and then one realizes that he has taken away, he has done a fraud of 14,000 crores, 20,000 crores or whatever, there is no, there's no benefit to the people, no benefit to the country as a whole. It actually brings down the economy to a very distressed situation, as we have seen over the last several years. So this happens mainly for two reasons. Collusion with people, collusion amongst people. Fraud cannot be perpetrated unless and until it is in collusion with people, with connivance with more than one people. And not only that, and they took benefit of the loopholes that is there in the internal control system. These people, they are aware by virtue of being in the banking, business, or by virtue of their employment, they know the system so very well. So they are aware of, the loopholes that's there in the system and in the internal control system. And because they are unscrupulous employees, they, instead of correcting it, instead of elevating it to the higher management to correct the situation, they actually utilize those loopholes for their personal benefit. So for an auditor, and you just imagine an auditor has to attest such balance sheet and all these things are going on behind. So what kind of risk an auditor carries before he attests, while he is attesting? One who is not helping himself, God will not help us. So we cannot pray to God and sign it. No, we have to be very conscious about what we are taking, knowingly, knowledge. We have to have that kind of knowledge, right? And the skill. So risk management process one has to understand. And then, we have to take into consideration the Money Laundering Act. So these are part of risk assessment. That, as I told you the other day, that this money laundering is actually done by organizations, companies, but the machinery through which they do is bank. All right. So if the bank has a good system in place which is continuously monitored, so double check is there. You see, companies would have a check, the banks would have a check. So if these two are working like a good oiled machinery, there is no reason why there should be a fraud. But it doesn't happen. This is what I'm talking is a theory. I'm talking about an utopian world, a dream But people are not like that. So people always tries to find out the loopholes which they utilize for their wrongful personal gain. And as a chartered accountant, and it is our responsibility to not to allow this thing to happen. All right. So we have to understand that and document it. And it is important to document it so that tomorrow if something goes wrong, how do you support yourself? How do you prove that you had been quite diligent? If we prove that the mistake had happened, in spite of the fact that we did our work diligently, prudently, we will not be taken into task so seriously. So we need to prove our that we are not guilty of misconduct. It's very important, and how we can do that through actual working and documenting it, keeping the evidences which we have discussed for several days this past month. So before taking up a job, acceptance and continuance is important, right? So we have to accept the job. We need to accept the job. Just a minute. Just give me 2 minutes. Okay. I have okay. So we need to accept the job. There are guidelines to which and Companies Act requirements also for acceptance. We shouldn't be disqualified. Auditors should not be disqualified because these are all listed in they are all listed. They are not companies, but they are listed. So they need to follow the requirements of Companies Act to a great extent also, like auditor. Auditors should not be disqualified under the companies sections of the Companies Act, and we need to declare that. We need to declare that in writing before we can accept with. And this happens every year. Don't even think, that this is for a continuing auditor. It doesn't happen. It does happen for a continuing auditor also. Can somebody tell me why an acceptance? Generally, an auditor, say for this generally happens for a statutory central auditor, that a statutory central auditor gets the statutory audit for 3 years, unless he won't be removed unless and until he has done something grossly incorrect, things or something like that. He generally gets a job for the 3 years. So he has accepted in year 1. Why it is important that, or why it is done? The acceptance is done every year, that he has to sign that yes, we are not disqualified under the section 141 of Companies Act, and we continue. So we give our continuance. Why is that required? We have given that in the past year. I say last year. Last year I got a job. So this year, why it is important? Can someone tell me? Please post it in the chat box. Rajesh has a question. I have not started. My dear student, you should start immediately. You should. I don't know whom this is meant for, because you have given the question in the morning session, so I believe it is for me. So you don't have much time. You don't have much time. Maximum 1.5 months is left. So if somebody has not started auditing, I think you're already late. You are already late. So you have to start immediately and read the study material and the allied materials immediately. And I think you need to spend quite a lot of time if you have not started the audit at all. This chapter is, this paper is important, and important, not important, you have to get marks to pass. All right. So as I told you on day 1 that, you should target 60. If you do not get 60 in 2 or 3 papers, it will be very difficult to pass. I'm not taking into consideration the rank holders. I'm talking of the general students, the general students who are studying. So all need to pass. Please remember, you have to, if those who have not started studying, please note you are already late. Start immediately, start reading the study material. Study material is very, very important to read, and try to answer the questions as much as you can. Write and write, because even today, MCQ is only 30%, 70% is theory. So unless and until you are writing, and please remember, it is expected from you as a final year students are taken very seriously. So you have to write meaty products. You just cannot write very superficially, like as if you're in inter. And you have to, content should be very meaty. Content should be very, that it should ooze out that you are knowledgeable, you have studied. So that paper should speak for you, that you have studied, you have already got the knowledge to become a chartered accountant. Please. So those who have not started, you have to start immediately. No more delay. And if possible, why possible? Make up, I don't know. If you already have made a chart, that's the way I always suggest, to my students, my article students in my office, that you must make a chart, where you can study. If you are in office, I don't think you will get more than 6 hours to study, but last 6 months you are not actually going to office. So work from home may not be that much even. So you get ample time. You have got ample time. So, you need to study 12 hours at least, if not more, and slot it. You must have a slot every day for audit if those who have not started. Okay, every day 2 hours, you must put a slot for audit. Immediately, make a plan. Whenever you feel like, many would say theory is so boring. You can't help it. You have to pass. You don't have a choice. You see, I keep on telling my final year students in my office who probably have failed once or twice, and they are naturally very frustrated. I keep telling them that, do you have a choice? Can you go back? You can't unwind. You can't go back. You have to move forward. So the best way to move forward is study, write, and sit for the exam. Pass in one go as fast as you can do. No point. There is no question of any frustration. Only one motto, that I have to pass. You don't have a choice now. Okay. Too late for anything. Okay. So please keep that in mind. Okay. Yes, Ranjit, you are right in saying that why we need to give a continuance. Any change in the engagement is one. Circumstances, like signing later every year is clarified expectation. Yes, you are all saying, but what about the client's expectations? Whether the constituent of the firm is same as last year. They might have introduced two more partners. Two more partners might have retired. One partner is a deceased partner now. So our constitution has changed. The firm's constitution has changed. And last year, because of that constitution which we had last year, we were eligible for the audit. And now this year, because the change in the constitution, we may not be eligible for the audit. So it is our responsibility and duty that we need to know that whether we are eligible, and then we have to give the acceptance as continuing auditor. You may say that MCA would know because we put in that paper, our details every year. Doesn't matter. We have to give this to the bank to be on the safe side. They always take in writing, that you are eligible. It's kind of a self-declaration that I'm eligible. I'm eligible for an audit in your bank, right? Yes. And of course, you may not accept an assigned engagement if you see some changes for not so good has happened in the bank. So it is from your side. What I'm also talking from the bank side. They want to know whether any change has happened for which they may not agree to, appoint you as one of the auditors. So that's also very important. Acceptance and continuance. Declaration of indebtedness. I told you day before yesterday that we cannot be indebted to the bank. That means we are not having any loan, but credit cards and these things are allowed. And so that doesn't fall in as indebtedness. But any kind of a loan we should not be having, or any of the partners should not be having. Neither the firm nor the partners should be having there. So that needs to be declared. internal assignments in banks by statutory auditors. If you're taking up a statutory audit of a bank in whatever capacity, as a branch auditor or as a statutory central auditor, have to give up the other work that you are doing for the bank. You need to keep that in mind. Terms of engagements. What will be our terms of engagement? Again, it is in bank, it is very generally, it's very clear, clear cut by the RBI that these are to be done. But it is always a good to, it's always a good practice to know what you have to do in terms of, your audit engagements. And we generally, the banks, they send a detailed list, detailed communication, written communication with you about your terms of engagement, what are the things you have to do, and things like that. Communication with the previous auditor is absolutely important by the code of ethics. We need to talk to the previous auditor if this is the first time we are taking up. Generally for branch audit, it is always a first time and the last time. So it is absolutely essential that you have to take, confirmation, no objection letter from the previous auditor, and we need to plan. We must have a eligibility can be checked. Yes, Ranjit, very good, very good. So, planning is very important. Like I told you that for a branch auditor, 3 audits have been given. Who's going to do the audit? Okay, so planning and engagement team is very, very important. Do you have people, or you start picking up people from the market? Please do the job. I have 3 audits you must do. Could you please help me? I mean, this is not the way actually it should be done, to honestly between this close community that we can discuss. This is not the way an audit should be done. It has to be taken up seriously and not just like a money churning engagement, yearly engagement for us. It shouldn't be looked into that way. Unless and until we prove our worth, nobody is going to give the money for value for that. All right, we have to prove our worth. So planning is very important. And statutory central audit, beyond a question that we need to plan, because it's a year, whole year we have to work for the client. This certificate, that certificate, tax, statutory audit, then comes the LFAR, then comes the tax audit. So the work is completed only by, say, July, August, and then again they would be having. So by the time July, August comes, you get a respite for a month, and then comes September closing. So statutory central auditor, they have to review quarterly audit. You have to do quarterly audit because these banks are for the banks who are listed. So limited review is done. So every quarter this has to be done. So we need to have planning. Many times from my practical experiences, I'm telling you, many times we had to give up certain smaller jobs because as I said, that you can't do everything. If you do not have that resource, smaller jobs which were one time, it was we had to give up, and we use dedicated partners only for bank audit. That throughout the year he should not be disturbed much, because he or she also needs some rest, need to update oneself, because study is very important. And then we cannot be 6 months old data we cannot take in our head and go to do the audit. We have to be up to date, you see. And so study is very important part of that, so those kind of things. So planning and establishing the engagement team is essential. Whoever does what the best will be engaged, including the IT. So so those kind of things you have to remember. Let me just see if I have missed anything. If you have question, post it. So when we had talked about the, identifying the risk management process and all, of course, we will take into consideration the SA 315 and 330. I'm sure you remember. You are aware that what SA 315 and SA 330 talks about. SA 315 talks about the risk assessment process that should be there, and how we should do our audit to identify that, that this bank is actually having a risk management process. And 330 talks about the risk management, what kind of controls they have put in to mitigate the risk. No one can say that there is no risk. There heavy risk today. Okay, especially in a banking environment where a lot of things have been made mandatory by RBI, by government, like the PSU banks. They have to have certain, government says that you have to have this agricultural advance. You have to have many CASA accounts, the savings account for people in the villages. You have to do it. And when you say that you have to do it, means you have to prove it that you have done it, and and it has to be signed by an auditor. So do you understand what kind of responsibility a chartered accountant in practice carries in case of a bank, bank audit? That's so we need to know that actually are they going now the bank. You cannot expect a bank to have branches, in small villages. That doesn't work. So this is outsourced. This operation is outsourced where people are engaged. Organizations are there and they are engaged. And once a week, once in 2 weeks, and if the village is very small, the population is very small, probably once a month they will go to those banks carrying cash, and where they will ensure that each household will have open an account with them, and money will be taken from them as a deposit. And if they already have account, and if they need money, they can keep the cash. An accounting entry, they will do it in their handheld devices. Just the operation they will do the handheld devices, and it will be transmitted. The data will be transmitted to the branch, and of course to the core banking over a period of time. So do you understand the implication of this? Actually they're dealing in hard cash. They're dealing in hard cash. There is no check system here. With the people at the villages, they are actually having cash. Say for during when the cultivation is over, harvesting is over. When the harvesting is over, they have sold. That is the time when it is insisted that you please save. You please save. That's what so unless and until they save, I mean, they cannot actually, you cannot bring them up in the economy, right? And so that they can consume better. You are not consuming the moment you have money. It is not like that. So for 1 month you have consumption, for the later 11 months you don't have, these people do not have anything to eat. No, that's not the idea. They should be having, equal distribution, whatever income they are having, whether in form of their own earning, their own revenue, or any help from any assistance from the government. So they should be actually managed through banking system only, and not through only cash. Cash will be exchanged because through bank only, but they should not keep it in their house. So that was the idea of having account for poor people, for the population who are under certain threshold as defined by the government. So these, and so naturally there would be plenty of risks involved there. So one has to be careful about how those risks are mitigated as defined in the auditing standards. So one has to be careful about that. Okay. Materiality should be decided with the help of the management. And as I told you other day also, in LFR, the LFR is getting modified. I think new LFR has come in. LFR was very old. The change was due long time. So I think it has just come yesterday only. I didn't go through it, but I got a link that new LFR has come in. Now that LFR talks about that auditor is supposed to review advances which are more than certain value. So we have to do it. That's the materiality as far as the advance is concerned. Okay. So even if there are hardly maybe for the central statutory auditors, it's very difficult to check 2 crores and above advances. 2 crore is too less in terms of the advances these days. But overall, we have to make a sample. We have to make a sample. So we have to take down the list of full list of advances which are 2 crores, and find out what is the value, how much percentage it represents of the total advances of the bank. So that materiality one has to take into consideration for the statutory central auditor. Okay, but for the branch auditor also they will do the same. Suppose a branch auditor has gone to a branch where, 5,000 crore total advance is there. So it is the responsibility of the branch auditor to take the list of advances which are 2 crores and below, say 2 crores only, 2 crores, and identify what percentage it represents of the total advances. Then take a call whether it is really material or not. If it is not material that way, he can decide to do a substantive, an analytical procedure that one or two he can pick up based on, but one has to be very one has to be very logical about the sampling. It should not be judgmental. Whatever you get, the data is available quickly. So we check this. No. So from the list, one has to make out, is there any, we can give it to a staff, please check whether these clients, and just try to find out, from the papers, from the files, if you get to see any paper that you get to see which can give rise to some kind of a doubt in your mind, skepticism. All right. So we tell them, we make the audit plan that, and we just give it to one student, that this is what, whenever you check the paper, keep this in mind, which is in writing. It is given to the student as audit plan, and go through the papers, and anything you come across, you please tell us. So we will decide whether we will go for a detailed checking of such advances or not. All right. And of course, we need to, as far as the reporting is concerned, we need to report to the RBI. Yes. RBI, SEBI, it goes immediately. It goes to SEBI the moment it is declared. The result is declared. That day it goes to the SEBI, and it goes to RBI. And RBI issued circular on recommendations of the the various fraud related to Ellen Mitra committee, and we need to take into consideration compliance with auditing standard. I think this we discussed day before yesterday. And fraud reporting under the Companies Act. It is important that we report that. So as a student going to write the exam, you need to keep this in mind very clearly. That the banking, just because it's a banking doesn't mean Companies Act doesn't apply. Companies Act very much applies to this. All right. So to the extent wherever it is required, like fraud, auditors. Qualifications, and of course auditing standards. There is now no doubt that auditing standards is ours, and it will apply to the auditors. Okay, and Banking Regulation Act of course applies, because when we report to the audit, our report contains that we have followed such auditing standard. We need to report that. Okay, conducting the audit, acceptance and matters which are covered under section 143 of the Companies Act and the company's rules. I think I'm just repeating this. These I have already discussed. Okay. The auditor's appointment. How is the auditor's appointment is done? Auditor's appointment is done in case of a PSU. It is basically done by the shareholder in AGM for banking companies with RBI approval, and in case of the PSU, it is done by the board of directors with RBI approval, and for SBI, it is done by the CAG and of course in consultation with RBI and central government, and SBI does their own for the subsidiaries, but they are nevertheless the list must approved from the RBI, because RBI decides which auditor will go for the cooling period and all. You must know as a student that even if an auditor is qualified for an audit, that firm may not get the bank audit just because you are qualified under the Companies Act. No, you may not get. Simple reason, bank has their own rule. RBI has their own rule that you cannot continue to have audit continuously for more than so many years, because we have to give chance to others. So you go to a cooling period for a certain period of time, and then you are again come back to the in order to get audit. But you remain in the panel. That you continue to be in the panel as long as you maintain your constitution correct, and then you go to the cooling period for some specific time, and RBI will again allot. RBI doesn't allot audit these days, which used to happen previously, but it has now been the autonomy to the bank has been provided, where RBI just send the list. As it stands today, RBI sends the list, and bank has the power to select their own auditor themselves. All right. Previously, for statutory central auditor, RBI used to select auditors. All right, but that has been done away with for several years now, at least for 5 years. It's been 5 years now. Statutory central auditor is being appointed by the bank themselves, and branch audit is always by the bank, but based on the list which is provided to them by RBI. This you must keep in mind for your exam purpose. Very tricky MCQ, question may come based on some tricky situation. Okay, case study. So if such case study, so please keep these small things in mind. And before I move forward, it is important for a bank auditor also to have a spatial consideration of the IT, information technology system, because the entire banking system is based on information technology today. I mean, you may tell me, I have not seen much of manual system other than one or two registers which they maintain. Statutorily, they need to maintain certain check register, this register, Other than that, the basic operations are all automated. It cannot be done otherwise. Today, the infrastructure is such that it cannot be done otherwise. Somebody is into banking business. If the new licenses which they get, they have to start with such kind of an environment, and it is very important. An auditor has to be very, very careful about a new bank, new bank who has got a license to start the operation. So that has to be, the information technology system, whether it's a new bank, whether it's a PSU bank, but for all scheduled banks, all foreign banks, foreign banks with Indian operations, they are also guided by RBI rules and regulations. They may not be by Companies Act if they are not listed, but definitely by RBI guidelines act. So these things we have to follow. So spatial attention to the considerations for the information technology, because all controls will be through information systems. So any loophole which is there, and that could be disastrous. And we have seen such evidences. Classic examples we have seen for PNBs, and only because non-integrated system, there were possibility of manual intervention, and that loophole was utilized by unscrupulous employees for their benefit. Okay, so it is our responsibility to identify it. Right? Like, say, for example, some special consideration in IT. As I said, that bank has to run 24/7. So simple things, other than only keeping in mind the fraud. We should not be only thinking about fraud. The other aspects need to see how the bank ensures that they will be able to run 24/7. Just because it is a machine doesn't mean that it doesn't need to be rested, isn't it? Don't you switch off your mobile at times? Don't you switch off, completely power off your laptop once in a while? You should, one should. Otherwise, system will break, because there are certain which we don't forget. There are certain guidelines, certain parameters that we need to follow. You need to flush out the memory, and because if the memory is too much and if it overflows, it will crash the system. And we, as an ignorant people, we say system has crashed. See, system has crashed because you didn't take care. System doesn't crash just like that. Why a person, individual will fall ill? Individual falls ill because he or she has not taken care of himself or herself. So similarly, a machine has to be given that care. Machine cannot take care of itself on its own. That's the only difference between a human being and a machine, right? So one has to give care, one has to take care of the machine so that it continues to run on 24/7. And that's the reason you see auditor has to also check the IT environment, especially the statutory central auditor. ACAs, they have to consider the, data centers. Data centers, I told you, data centers should be RBI mandates that data should be ISO, data center should be ISO certified. Why? What is the benefit of ISO certification? That they follow certain guidelines. So it can be, RBI would know that to maintain that certificate, they have to maintain such system. All right. So this is kind of an indirect conclusive evidence that they are following these guidelines because they are certified. But at the top of it, you have to review it. As an auditor, the responsibility doesn't stop there. That okay, they are certified, so fine. What if they just take the certification and don't follow the procedures throughout the year? They will do it only when they have to renew the certificate. Then you wouldn't know whether actually it will be completely failure of internal controls. So as an auditor, just by looking that okay, just by knowing that the data center is ISO certified doesn't actually shouldn't give us that kind of a respite that we will not review the information technology in more detail. You don't have to spend much time. It doesn't mean that you have to spend days and days there. 1 day, 2 days, good enough with adequate, resource who's having knowledge to probe, ask questions, read reports. 1 or 2 days is good enough because in LFAir, as I told you, in LFAir for the ACAs, we have to have separate, chapters we have to write. Chapters we have to write on information technology. And that is given, in a joint audit, in a central, in an audit, the ACAs are basically joint auditors. So one of the ACAs are given that task. Whoever is, having more experience in that area is given a task that you take care of this. So you see, not only you are responsible, you are actually carrying the responsibility of the other, your co-auditors who are relying on you. So these are very important because they will be responsible jointly and severally. So it is not allotted to us, it is, so we just decided amongst ourselves and it will be signed jointly and severally by all the auditors. So everybody will be responsible. So an auditor SCA has to be very, carrying a lot of responsibility on his shoulder. So those kind of things, that how one ensures that the banking operations are, environment as such that it can continue to operate on 24/7 for 365 days a year. And we have to consider that, the foreign operations also. Suppose somebody is gone abroad, for whatever, it could be for a job, it could be for, as a tourist, and you are carrying a credit card, which is a PSU bank's credit card. All credit cards are, most of the, I shouldn't use the word all, most of the credit cards are international credit cards. So that means you have to ensure that the credit cards can be used in those foreign lands also. All right. So do you understand what kind of, but you're transacting in different currency. You are transacting in different currency. If you're in Europe, probably it will be transacted in, euro. Or and if it is in other countries, it could be in dollar. In Asian countries, it could be in dollar also, or their particular, it could be Hong Kong dollar if you're in Hong Kong, Singapore dollar if you're in Singapore, and depends on wherever you are. So the system should be such that it is capable to take that transaction after the adequate security considerations, controls considerations, and then process that transaction so that the user can use it, even if he is in a foreign land. Those kind of things are important for us to keep in mind. Access control, which we discussed little bit during the special audit aspects. I'll not go into detail. Segregation of duties are very important. Okay. The charges, very important for a bank auditor to know. Questions may come. Be careful, Questions may come like charges. Charges like what charges? Say interest on advances, penalties for not keeping, not providing stock audit reports or stock statement or overdrawings. There can be a lot of scenario or situations where additional charges are levied, penalties are levied. Had they done automatically? In all cases, with a lot of responsibility, I'm saying these all the cases, this is done automatically. At least the systems are capable to do it automatically. But that doesn't give us the comfort that there will be no manual intervention. That you please keep in mind for your exam purpose, my dear students. Manual intervention will be there. Because now you can ask why manual intervention is required. Because though control should be automated, we can't be rigid. Business has to be, we have to weigh that, we have to trade off between, what is absolutely important and cannot be avoided, and also that we need to continue with the business. We cannot be so rigid. We need to be little flexible. Now, how we can be flexible? It is an overdrawing for a day or two, and it is one time, once in the blue moon, or once a year, or the first time it had happened that the customer has overdrawn. All right. Overdrawn facilities can be given up to a certain level, which is being again governed by RBI Act. Whatever percent, and it can be given only twice a year. But the branch head has the provision given the power to allow such overdrawings based on certain things. So, as an auditor, it is important for us to ask that question to the branch head. If you see that he is overdrawing very often he is overdrawing, and on the top of it, he is not being levied any penalty. There are two scenarios I am giving. One scenario is that the penalty is waived off by the branch in charge, because this customer has defaulted or overdrawn only once in the entire period under audit. Only once he has overdrawn, and the branch manager said that he has never overdrawn in his life. He has always been a very good customer. He has always repaid on time. I'm talking of an advanced customer, right? So he has always repaid on time. His interest has been always serviced on time. This was one emergency, and that's why he asked for, and he also requested with proper letter, and the branch manager showed you that letter because some exigency came up, and he requested for a overdrawings, that too for a day or two. So, because keeping that in mind, we took the decision to waive off the penal interest. As an auditor, you can decide. You are free to choose. As the branch manager is free to decide, based on his prudence, that whether to waive or not. It's because an auditor is independent. It is your prudence and knowledge and expertise and apply, and your right to decide whether such waiver was correct or not. Accordingly, you can write it in the LFR. You may not take it to the main report unless and until that amount is huge. You don't forget about the revenue leakage. A very important aspect is in bank audit, is where an auditor needs to identify revenue leakage, if any. And these are the means and ways of revenue leakage, right? Keep that in mind. Okay. So based on that, and another scenario is that this, party defaults a lot, and every month he is overdrawing. And there are justification for that. They are waiting for a credit appraisal and upgradation. So that cannot happen overnight. It takes time. So he is waiting for that. So that's the reason he is overdrawing, and his penal interest has been waived. Third case could be that there is no such possibility of any credit, enhancement, and he is defaulting, and the branch head is allowing his waiving off. So these three scenarios are completely different, and based on the scenario, an auditor has to decide whether such waiver is an act of prudence or not. So this has to be decided. Please remember, my friend, students, this kind of question you may encounter, and you have to decide. Okay. So this is guided. There is no hard and fast rule that one cannot waive off the interest, this penal interest. But what could be the implication of such waiver is revenue leakage. Now, how much revenue leakage an auditor may decide to not report is based on the materiality. All right. So keep that in mind. Scope of the audit. I was sorry, I was a little going haywire with this slides. I'm sorry. So this we discussed that material. So I'm extremely sorry. There is some gap between my discussion and the slides. I'm sorry. So identifying and assessing the risks of material misstatement 315 and how they are taken care of through controls is SA 330. Actually, the problem is that when I start talking, probably I was talking from my experience, so I kept on talking and I missed these slides. I'm sorry. Huh? Excuse me for this. And assess the risk of the money laundering. SA 240 talks about that, and specific risk. Any specific risk that you can think of. That's the reason why one should have a understanding of the business processes. Otherwise, you won't be able to identify the risk at all. If you do not know what's going on in the bank, how will you know that whether I need to look into that area? I remember during my, when I was a SCA, this particular bank, a PSU bank, very large PSU bank. I mean, many banks has got merged with this bank. He's a primary bank now. Their IT department, the data center IT department was not ISO certified. And we couldn't believe it. That how can you not be ISO certified? And so they, the first year when we went, and it was the first year for our audit also. So the head of the IT was saying, please give us this time, so much time and all. I said, how can you have so much of time? I mean, it's already passed. I mean, previous auditors, they didn't say anything that cannot be it is a favorite word used by the auditees, that the other auditors never told us this thing. They must have told. There is no reason to disbelieve our colleagues, right? But somehow it was managed, or somehow whatever could have been happened. We said no, and it was reported, and very seriously in the audit committee, where the RBI director is always there. RBI takes it very seriously. Anything, and they told us, it was I remember it was a lady director from RBI, and she said that anything related to the IT, our antenna goes up, because this is the route. This is the route through which a fraud perpetrates in today's world. And within 3 months, and that gentleman was actually scolded very heavily in the audit committee in front of all of us, and he said that no, I'm going to get it done within 3 months time. And they told us that you please supervise it. We cannot do that job. They told us that you please supervise and see that is getting it done within 3 months time, and report it to us in the next quarter limited review meeting, and which we reported, and it was done. So these sort of things are taken care of at the moment. So that's what I'm saying. Unless and your understanding is not correct, you won't be able to, as an auditor, you won't be able to identify the risk. And if you do not identify the risk, your background is completely, foundation of the audit is wrong, not background. Your foundation of the audit is wrong. That I could not identify the risk. How much audit you do, later on you cannot prove yourself not guilty. That I did so much of audit, but what was the point of such audit? You could not identify the risk because you didn't do the understanding well. You didn't spend enough time to understand the banking business properly, especially for the first time auditor, right? And next time when you go, it is much easier. As I said, that we maintain this as a in a permanent file, and we take it out the next year, go through it, talk to the client that you please tell us what changes has happened since last year, and we decide whether that is that calls for a risk assessment or not. That's your judgment. That's an auditor's judgment. Nobody can question that I decided, I judged it, and I have a justification. If we can justify ourselves in the any court, any tribunal or whatever, I mean, they will give us a patience hearing, and they will listen to us. That yes, in spite of all my prudence and judgment, this has happened. But I mean, for that I may not be guilty of misconduct. So specific risks one has to keep in mind. Engagement team discussion, response to assess risk 330, establish the audit strategy, SA 300, Audit Planning Memorandum, APM. It's very important that we must have an audit APM. Plan must be written, and so many, it doesn't have to, again, as I said, an auditor doesn't have to reinvent the wheel. The checklists are available. Guidelines are provided to us. Institute every year. Every year they come out with, banking guidelines for branch auditor, bank audit guidelines for branch auditor, bank audit guideline for the ACAs. And depending upon which job is being done by a member, it is important for us to read it, thoroughly read it, keep it. Even if somebody cannot read it and remember it, we can carry it with us. And it's available. Today, soft copy is available. If somebody wants to carry a hard copy, anything. But we cannot say that we don't know. That's what I'm trying to put forward to you as a student. If such question comes, that the auditor says that I was not aware of it, that cannot be there, cannot be an excuse. It cannot be, these cannot stand in the court of law, any law. All right? Whether our internal or, statutory. So, he will be guilty of misconduct. So, we have to have an audit plan in place, APM. And these are available, checklists are available. We can make small checklists, from the guidelines. It's very easy, very easy. These are the things one has to spend that time, APM, and determine the audit materiality, as I told you, and bank's ability to continue as a going concern. Very heavy word, very heavy word. If somebody, just imagine somebody reporting that we don't know if a bank is bank can continue as a going concern. I mean, unimaginable. There could be so many reasons for such kind of a comment. It's liquidity position. It could be as serious as liquidity position based on the NPA, net worth. We calculate net worth. I'm sure you're aware of these, those who are done or had been part of ACA. We calculate net worth. So if you see that the net worth is, if there is a problem which can give rise to, going concern issues, so one has to look into that. I'm talking of, say, smaller banks or banks with a lot of distress, a lot of NPAs, and so one has to keep this in mind. Audit report, whether in the auditor's opinion the balance sheet is full and fair, full and fair. It's a fair balance sheet containing all the necessary particulars and is properly drawn up as to exhibit a true and fair view of the affairs of the bank. We generally say true and fair, not full. In case the auditor had called for any explanation or information he has received, this is normal. This is general, applicable for any audit in that matter. So this we have to report. This we need to report. The audit format. The audit report format should be in compliance with, auditing standards tell us a whole lot of, format they have given. Okay. SA 700, forming an opinion and reporting on the financial statements. Okay. How to write that? 705 talks about the modifications to the opinion in the independent auditor's report in case we feel that there is some, we made a mistake or something like that. Talks about 706, talks about the emphasis of matter. SA 710 talks about the comparative information that we have to give year to year, comparatives. These are important. These may not all apply for branch audit. Okay, these may not always apply for branch audit. Keep this in mind for your exam purpose. But they are essentially all are applicable for a central audit. All right. But many of them, most of them are applicable for branch audit as well. Comparatives we may not have to do. If you remember, those who have done bank audit, you will remember you generally when we get the scope of work, which we discussed at the beginning, when we get the scope of the work, it is defined there. What are the things we don't have to do? Can anyone who has done any bank audit can tell me as a branch auditor, what is the task that a branch auditor doesn't have to do? Please tell me, post an answer. My question to you, as part of the branch audit, tell me one function, one task, which a branch auditor is not responsible for, he doesn't have to do. Tell me. from the advanced point of view. I'm giving you clue also. I'm talking from the advanced point of view. This you don't have to, a branch auditor doesn't have to check. This just take into consideration that this is a case study coming to you in your examination. Think in that matter and answer it. Do I have an answer? Please post an answer. I'm sure some of you have been the part of the bank audit in whatever capacity, branch auditor or SCA. No? No answer? Anybody's answering? I'll wait for 1 more minute. The provision, the NPA provision we don't have to give. We don't have to ask the auditor to pass an accounting entry for that. You don't mention that in the memorandum of changes, MOC. You don't have to mention that or pass an accounting entry for that. This is taken care of at the head office. And this is given to the branch auditor in the scope of work. What are the things you don't have to do? Okay? You don't have to do. Because that is not the function of a branch. It is the function of the head office. And once head office does it, they will pass the accounting entry here. That is a different thing. That's a different thing. Alright? So, we don't have to do that. But if yes, interest has not been processed, that is the task of the branch auditor, and you can always pass that accounting entry to the memorandum of changes or MOC. Alright? So, these are all defined in the scope of the work. Okay, so these auditing standards one has to keep in mind. The auditor's responsibility to other information in documents containing audited financial statements as per SA 720. We do not go into the detail because you would have separate, classes on these standards. So we are not going into detail of this. Audit report to include matters covering details under Section 143 of the Companies Act and of course the audit rules, the company's audit and auditors rule 11 of the Companies Act and the Companies Act. Whether the bank has disclosed the impact of any pending litigations, bank has made provision as required under law and accounting standards. So these are you can say these are taken care of at the HO. These first two is absolutely at HO. Whether there has been any delay in transferring amount required to the this education and protection fund, these also is done at the HO. But litigations, the detail of the litigations has to come from the branch. The second one and the third one is taken care of solely at HO, but the first one, whether there is any pending litigation, there could be a litigation against a customer which has been filed by the branch. It is possible, but that litigation is in such a state that it has not gone to the HO. So, and you come across that, if you come across such, information, it has to be notified whether HO knows or not. Generally, HO would know. Any case filing is through the, their legal department, and HO is aware of it. But doesn't matter. You don't have to know whether they know or not. But if it has come to your notice, it should be notified, because we have a separate certificate to be given. All right, there is a certificate which talks about the pending litigations in a branch. So auditor has to give. So that's what I'm saying. The March audit is very, it contains so many certificates to be given by the branch auditors, and one of such certificate is that whether any pending cases are there, and we have to give the details of such pending cases, what is the status. So you cannot just sign sitting at your office. One has to go through the papers, so that you must remember. Otherwise, you will be guilty of misconduct. Okay, but the other two is generally taken care of at the making the provision is taken care of at the HO. And of course, the long form audit report. It is very important that an auditor prepares the long form audit report with due care and prudence, and whatever could not be and whatever is not qualified to be reported in the report can be written in the LFAR. We can pour as I told you, we can pour our heart out in the LFAR. There is no bar what you can, but it has to be accepted. I mean, you just like that, you cannot write anything, whatever you wish to. They have to be supported by evidences and facts and figures. And one can write that. And it has to be accepted by the management. Management also signs the long form audit report. And as I told you the other day, again I'm telling, this long form audit report is taken very seriously by the SCAs and of course by the RBI inspectors. Other considerations, special considerations in the IT, internal audit and inspection. Internal audit and inspection is a very serious affair. Is a very serious affair. And often in my practical experience and career, I have seen this is taken so lightly, and very sadly, auditors say that it is the payment is not much, so we can't spend that much of amount. And well, that cannot be the justification. A question may come when I'm giving you a real life scenario, and case studies are supposed to be based on a real life scenario. And suppose some problem has been identified by the branch or the bank, which was that branch was audited by the concurrent auditor, internal auditor, and they failed to identify such problem. And the justification, one of the justifications is they gave that, well, the fee is so less that I couldn't spend such time. Absolutely, a case of misconduct on the auditor's part. If you feel that the fee is less, don't take up the job. As simple as that. But if we take up a job, it has to be done as per the guidelines. Period. So internal audit and inspection are very, very serious affair, and it is taken care of on a day-to-day basis. So there is no reason why one should not be able to find out. And program must be there. And generally what we do, we use students, isn't it? A partner cannot go and sit there 22 days a month to do the audit. So we use students, we train them, and they do that audit for continuously for whatever period there. And we have a backup also, that he has to be given leave for exam and all. So when he is or she is not there, who's going to do it? So accordingly it is done, and once a week the partner will go and check what the staff has done it. And that we have to have an audit planning program, audit program for that also, whereby a student or a staff will do the audit and document it, because a partner is going, or a senior chartered accountant is going once a week. Now you cannot explain what you have done for the last 4 days, right? On the 5th day he is going, and 4 days work he cannot explain. So he will go through the documentation that you have maintained, and based on that you will do. So internal audit and inspection are very important. Stress testing, basically stress testing talks about how much we can try the bank before it will break all the system. That's internally done on operations as well as on information technology. And Vessel 3 we will discuss. Internal control over, let's talk about internal control a little bit. General cash clearing, constituents ledger, bills for correction. Now, what is it? What is this? So what internal control? Now, as we said that we need to review the internal controls, and then we actually, start looking into the papers. So understanding and the general controls over these various aspects. All right. So what are the things that you need to see? Like say general is that frequency of, rotation. Banking rule says that there should be rotation of duties. Previously, it used to be only the, non-managerial staff. Today, even the managerial staffs are also rotated because it is the fact. It is a proven fact that frauds have been unearthed when during this rotation. PNB is again a classic case. The moment the rotation happened because of retirement or whatever, a new person came in and he identified it, and he was a good man, and he reported it immediately, and next the rest is history, as they say. So there should be, and then some general controls. Work should be checked by another, segregation of duty based on. So now every transaction cannot be checked by another person. So a threshold has been decided. Like say, cash withdrawal over and above say 50,000, it has to be also approved by another officer. So depending upon the threshold, but it has to be there. Now how do you ensure that this is there? So the moment you ask such questions, as per your checklist or the program, they will say this is automated. This is automated. We don't have to. So now will you stop there? You will just write that it is automated and don't do anything? No, you have to. Test of control. The audit talks about the audit process is like that, right? Not only you identify the risk and the control, but you need to test it, whether the control is actually working or not. If the control is not working, you have to resort to substantive testing or test of detail. So how will you test the control that if, yes, somebody is, if a cash withdrawal is more than 50,000, another person has to approve. So you just tell them that next time when such transaction happens, you please call me, that you can, this is an audit procedure whereby you can really check it online, live. Or you can take a dump of the transactions. You can take a dump of the transactions over and above 50,000, and from the dump you see whether it has been approved. The log, whether that log records that it has been approved by the another person. Now, a classic example happens, example I can give, the log doesn't save the data of this audit trail is not saved. So you really cannot make out whether it has actually been approved by a second person or not. So you cannot take a decision. You need to report that. You need to report that. And now where you report, that will depend on the materiality. But definitely it has to be reported in the LFAR. This is a loss of internal control. A lack of internal control. That such audit trail is not there. Audit trail has to be there. Otherwise, how they themselves know that it has been approved? Forget the auditors. How they know? That means there is no monitoring. Control environment is not good enough. You see how it is falling one by one and how they are interlinked. So easy to, if you are knowing this, if you can apply it in practice, it becomes so easy to identify that if there is any lack of control, how you will present it in your report is a different ballgame altogether. All right. So there are a whole lot of things that generally, I'm just giving you one or two examples. Cash. What are the internal control over cash? Cash has an inherent risk. Cash carries an inherent risk. What is an inherent risk? Tell me. What do you mean by an inherent risk of cash? Can you give me? Can you please tell me? NPA, risk adjusted asset. Yes. Right, Ranjit? Now tell me, what is the inherent risk of cash? What is the inherent risk? Cash is susceptible to theft. That's the inherent risk. Why do you put your cash in, under lock and key? Because the very fact, inherent risk that a cash carries is that it is susceptible to theft if you keep it in open. Okay? So we have to have a adequate control over the cash so that it is under double lock. Cashier's enclosure should be always locked. During the office time, during the duty hours, that cashier, if he is inside the, his cubicle, or if he goes out for some reason, it has to be kept under lock and key. There is no, excuse that why it was kept unlocked. All right. So he is responsible. That is his responsibility. If he might say that, the lock was faulty, the lock was broken. Did you report it? It is his responsibility to report that the lock is faulty, and there is no time gap when it should be corrected. It has to be rectified, replaced, repaired, that lock immediately before the close of the day. And probably during such time that it is not repaired, the cashier cannot move out, and some other cashier can come and sit in. That enclosure cannot be left unmanned, unattended. All right. So these are the various things about cash. And it must be under the joint custody, double locked, and also a responsibility of two responsible officials. Normal checking of the cashier. Cash should be test checked on a daily basis. Suddenly, the cashier is checking, and it is being countersigned by the other officer. The officer may decide, to also count the cash. We generally count the cash half. That I will, in a bundle, I will calculate. I will count some. You count the rest. I will not tell you how much I have counted. Now, isn't it? I will not tell you. You count, and then we will calculate and see. I am an officer. I count some and I give it to the clerk. Right? I didn't tell him how much I counted. So he will count and tell me the rest. Then I will add my count and see whether the bundle contains 100 notes or not. Okay? So this is generally, many times during audit also we do that. We give some to the client and tell them that you also count. Okay, first we can do, and then and don't tell him how much you have counted. Cashier should have access to the customer's ledger accounts and day book. Day book is the daily balance book. This is an important safeguard, as the bank management are often tempted to use cashiers because of their short working hours as ledger clerks in the absence of regular staff or on leave. This can result in very theft, and which can be very expensive. Counterfoil of cash receipt vouchers are important. They should be matched with the actual cash that you have received. Okay, counterfoil must be matched. Checks and demand drafts that has been, payments made on the basis of the check, demand drafts have been passed for payment. Okay, depending upon the value, and scrolls of their, receipt and payment scrolls of their total should be compared with the cash column of the day book by independent persons. It doesn't have to be daily basis, but generally in large banks it is done on a daily basis, and if not on daily basis, on a regular basis. Many banks do not have a provision to, many branches do not have the provision to keep cash in their branch. It has to be moved to either some bank or into some other chest maintained with some other branch. So you, as an auditor, it is important for an auditor to check that whether they are allowed to keep the cash balance. Many times it happens, the cash balance as mandated by the bank, but the cash balance as maintained by the branch is very different. They are maintaining very high cash balance, all right, but they are not supposed to. They will have their justification. They may not have their justification. Depending upon that, one should report, but we need to know. Cash insurance. Insurance is one thing which is taken at the HO level, and the client will immediately, the branch management will immediately tell you, we don't know about the insurance. So this is taken at the head office level on an overall basis. We must report that in our LFA, that we could not check. They could not provide us with the, insurance, and insurance is not taken branch wise. So even if you get if an auditor gets a copy of the insurance copy, it cannot be nothing can be made out, because you do not know the total cash holding of the banks as a whole, all the branches taken together. So it will not mean anything. So we need to report that cash insurance on cash is taken at HO level and should be actually done by the SCA on an overall basis to see whether the insurance is adequate or not. Okay, and they allocate to the branches. So one thing an auditor can mention that the cash holding is more than what is allotted. There is a chance that it is not insured properly. That we can mention always in the long form audit report. Okay. how much a teller can make payment, in cash. That also can be provided. Lakhs and lakhs, couple of lakhs, can somebody make a payment in cash? Immediately it gives a trigger. These are early warning signals, not necessarily for fraud. Somebody is, maybe kidnapped, and he has been said that you don't go to the police, get the cash. So he is withdrawing cash, and it is a trigger, early warning signal for the cashier at the teller to notify that this fellow is withdrawing money, and there could be some problem. I just gave you an example. Okay. It could be and related with anything, anything, cash dealing, anything to do with cash dealing, which may not be in the right way of doing business. So if somebody is withdrawing such money, it can be, such trigger should fire. Okay. All vouchers relating to the accounts of customers which the teller handled should first be sent to them and entered by the ledger cards. All right. So so various kind of controls are there, and which auditor should look into. Clearing, receipt for clearing, checks receipt for clearing. Okay. So it could be inward clearing, should be checked with the list so that you have received check for inward clearing, and outward clearing is one that the checks which you have received should be going out to get the money, and then it will be deposited to the customer. Okay. So independent list should be prepared for checks debited to different customers' account and those returned unpaid, and these should be cross-checked by responsible officials for returned cases and things like that. Money is not there. Inward check. Inward check means, what does it mean? That a customer of this particular branch has given a check to somebody. Okay, customer X is having a account with this particular bank. Customer X has given a check of say 5,000 rupees to vendor B. So vendor B will deposit that in his bank, in branch. Okay, through inward clearing it will come to this bank, so that the 5,000 rupees physically actually is taken away from the customer X's bank account and goes to that particular account of B in that particular bank's branch. Now when it comes for inward clearing to be debited, for debit in the customer X's account, the branch identifies that there is no money, and that's the way the check is returned, right? The check goes back. So these should be all reconciled, that how much is actually, for all the inward clearing, how much was actually paid, so total count with individual count, and how much was returned to whom. It could be a branch, it could be RBI, wherever, depending upon from where such inward clearing claim had come. Alright. And similarly for outward clearing also, similar things will be done, that they should be made a batch, and accordingly they should be sent to the necessary places where they will go for the clearing. And only when they receive the money through the established channel, the credit will be given to the customer. Credit will come to the customer. Alright. So this is the way the inward clearing, outward clearing happens, and the control should be there. The total number and the amount of checks sent for outward clearing should be reconciled with the total clearing pay-in slip. You got it? It's like when we deposit the check, we are depositing check here which we have received from somebody. Now just think of customer B. In his case, it will be outward clearing. Customer B has got the check from customer X. So he goes to his bank's branch, and he deposits by writing a slip, right? Now when he writes that a pay-in slip, so he will have a counterfoil, and that main pay-in slip is deposited there along with the check. So when the branch takes periodically, they will take the checks that is deposited in the check box. So they will take the checks from the check box, and they will count it, make the total, make a list. What is the check? It is meant to be cleared from which bank, etc., etc. And they will also check whether the value of the check and the pay-in slip are matching. This is what they do. Many times they call, madam, this value is wrong. In case I make such mistake, whatever you have written in the pay-in slip is not matching with the check. So these kind of reconciliation one has to do. Or signature is wrong. These kind of things before it is sent for outward clearing. It has to be checked by the branch where the check has been deposited. So keep that in mind before clearing. So inward clearing and outward clearing. And the constituents ledger is basically it's a before making the payment. Should the check should properly be properly checked in respect of the signature, the date, a balance in hand, etc. Okay, this is for the inward clearing. One is also for the inward clearing, that he has given a check drawn on this particular bank. So he was a customer on this bank. So it had, before giving the debiting the customer's account, bank should check whether that signature on the check is matching with the signature which is stored in the database or in the check card. All right. And of course, value will be checked. So accordingly, and should be passed by an officer and entered into the constituents ledger. No withdrawal should be normally allowed against the clearing checks deposited on the same day. Many times, I'm sure you have encountered this. You deposited it, your balance is showing, the balance taking into consideration the check that you have deposited, but it is not showing as a clear balance. Clear balance means the amount you are holding, but so that is not subject to the new check that you have deposited. Total balance will be different. It is also including the check that you have deposited but not yet cleared. So the total balance will show 5,000 rupees, subject to a 2,000 rupees of check which has gone for clearing. So how much is the clear balance? 3,000 only. Okay, so one can withdraw only 3,000. So clear balance can be actually the cash that one can withdraw. All right, and many times it happens. Even branch can give a waiver. Branch can give a waiver to such clauses, depending upon the case-to-case basis, the history of that customer and the situation. Okay, so that can also be provided, but very rarely, generally not for normal customers, never. Okay, an officer should check all the entries made in the ledger with the original documents, particularly noting that the correct accounts have been debited and the debited or credited as the case may be. Ledger keepers should not have access to the voucher. Summary. Again, deviation of the non-compliance of segregation of duty. If I have ledger and voucher, I can modify one or both to suit my requirements. So that's a segregation of duty, that I should not have the voucher and I cannot get also right to the ledger. Okay. Now today we do not write it manually, so that means logical access to the system. Physical voucher and logical access to the system one should not have. Interest debited or credited to constituents account should be independently checked. Okay. Bills for collection. Bills for collection, that you deposited, customer deposited bills, which will be sent outside for collection, based on which payment. So it is basically, for the advance accounts and things like that, it happens. Advance based on bills. Credit line is there, which is based on bills. So what happens in this case? All the documents accompanying the bills should be received, checked, entered in the register by a responsible. Here it is many places it could be a manual register. And at the time of dispatch, the officer should also see and the documents and to verify that all necessary bills are there. Otherwise, it will be returned by the other bank branch, that it is not accompanied by all the documents that are necessary to be sent with the bills. So a checklist is generally there, which a person who's handling the bills and the senior also should review. And many times it is attached. These are the checklists, the documents that we need to send, and these are what we are sending. So that gives a quick reference, and also so that they do not forget to send documents with the bills. So the accounts of the customers or principals should be credited only after the bills have been collected or advice to that effect received from the bank branch. What does it mean? Will the customer get an immediate credit by putting in a bill? No. So please remember, the bills purchased and bill for collection are two different things. I'll explain. Those who do not, if you are not aware. So bills for collection. So bills for collection is that you have a credit line. You have a credit line which is based on the, your sale. The customer has taken an advance credit line and he sells his products or services on the basis of which he has got a credit line with the branch. Fine. But the condition is that he will deposit the bills and the bills will be exchanged between the two banks. Okay, it could be, a foreign transaction or a domestic transaction. Okay. Now, when the bill is deposited, so I have submitted, dispatched the material. The customer has dispatched the material, and now he has to raise the invoice. The money will not come from the customer directly to his bank. It is based on the bills for collection. So he has come there, with all the documents necessary, and he submits it to the bank. Once he submits it, he will not immediately get the credit. Now bank will decide, negotiate. Basically, they will now send the bills along with all supporting documents as per the requirement to the other customers to whom it has been sold by the advance party. Okay, to his designated bank branch. That bank branch, when it will receive the bills and they will see everything is in order, including that material has been received, acknowledged, invoice has been acknowledged, whole lot of documents are there. When he is satisfied with all the documents accompanying the bills, he can give an acknowledgement that yes, all are good, you can make the payment. Okay. The other customers to whom the product has been sold, he will get the money from that bank. He has probably a credit line with the bank. So from his credit, his available credit, he will give the money to these customers, the seller here, to these customers' bank account. Okay. So based on that, either the cash has actually come to this bank or a notification to that effect that the documents accompanying the bills are good, we are sending you the money. This branch can decide to credit the customer's account. Customer here is the seller who has given the bills for collection. Okay. So here you see the receipt is happening, the payment is happening between two banks. Here the customer and the seller, recipient and the seller is not actually handling the cash. Nobody is paying online. The bank is paying online because it is based on credit line. Okay, and it is the contract. It is kind of a contract. Even if it is a credit line is used, the customer can make direct payment. That is not a point. The point is here, the procedure for the business here is for bills for collection. So the two banks will negotiate these bills accompanied with the documents, and once it is satisfied by the recipient, the branch will notify that it is all correct. If he is not happy, they will say that these are the documents pending, so it is not, you please send those data again. And so the branch which has sent the bills for collection to the other bank, they will not credit to the customer, pass on the credit to the customer unless and until he gets a positive acknowledgement from the other bank, or he has not received money from the other bank, either of the two. Okay. So at least a positive acknowledgement that everything is all right. The money will not be given to this particular customer's account, who is a seller here in this case. Okay. So it should be ensured that the bills sent by one branch for collection to another branch are not taken in the bills for collection twice in the amalgamated balance sheet of the bank. We have to be very careful about that. That both are taking. It has to be in either of the two. Either of the two. It cannot be in both for bills for collection. Okay. You are also taking for in bills of collection. That person is also being taking into bills for collection, and it is getting inflated. Okay. The balance sheet is getting inflated. So one has to take care. You don't talk to the other bank, but you see the scheme of entries. Scheme of entries. If you have sent the bills for collection, but you have not received the money, so credit has not gone. There is no, credit. So it is still lying as in the bills for collection is non-fund. It has not been converted into fund based. Okay. So the moment you actually have the money, then it becomes a fund based. The bills for purchase. In this case, what happens? The difference between the bills for bill purchased and bill for collection is that here the bank purchases the bill immediately and gives the credit to the customer. That's all. The procedure remains the same, but here only the credit is given immediately. It is, it is encashed. That I am giving you the bills, you please get it from the bank, the money, but you don't wait for the money to come from the other bank. In case of bill purchase, it is the cash is immediately given to the customer, who is the seller in this case. Okay. At the time of purchase the bill, that officer should verify that the documents are properly assigned. Let me get an answer from you. Did you get the difference between the bill purchased and bill for collection? I need an answer, please. Ma'am, how to treat the money theft from bank before audit? I'll come to that. Shivagami. I'll come to that. But please post an answer whether you get the understanding correct for bill purchase vis-a-vis bills for collection. Very important for you for your exam purpose. In case of bill purchase, credit is given immediately to the customer. In bill for collection, it is the bank waits for a positive acknowledgement from the other bank. There's a difference. Keep that in mind. In case of, theft is reported in certificate. We have to give certificate where there is been theft or a fraud. So if you come across such a situation, now thing is that before an audit, how do you know that there has been a theft? That is the question. Suppose they don't tell you that there is somebody has taken away the cash. Very difficult question unless and until they come out on their own and say that there is a theft. Many times it happens that, so there are underlying internal controls. I'll give you two situations. First situation is straight and simple, that cash has been stolen and it has been reported. Somebody has stolen, maybe, thief came, dacoits came and stolen. So a fire has happened. So we will go through the legal file. There is a legal, if a legal person is there in the branch, have to sit with the legal person, or if he is not, there is no dedicated legal person at the regional office. There has to be legal person. So we need to talk to them to get the, information about this branch. And at an SCA level, there is the opportunities are whole lot for the auditor. So this is a straightforward case where the theft has happened and it is reported. So you can come to know from the, FIR and the legal papers, and we report that in a certificate. Special certificate is there. Right? Second case is complicated, where it is not reported. Where it has not come out, the management is not knowing how the theft happens, that at the end of the day, the cashier takes some cash, during the day, takes some cash, naturally with connivance or in collusion with senior, and uses it for his own business purpose, personal business, and replaces it periodically. How would somebody come to know? That's the internal control, that it should be the cash day book should be closed every day, not only by the cashier, but it has to be essentially signed by officers. Now, if all the officers, the relevant officers and the cashier, they are in collusion, well, fraud will happen. We can't avoid that unless and until later on when the auditor comes and finds out. Very difficult. That's the reason concurrent audit is there. Why do you think so much audit happens? Even a statutory auditor won't be able to find out. A concurrent auditor possibly can find out. I mean, it is not always possible. A concurrent auditor doesn't check cash every day, probably end of the day, or it could be as part of the scope of the audit that during the day, and at least during when the cash is closed, by 2 o'clock or 4 o'clock, so depending upon the time, or maybe latest by 5 o'clock. So when the cash is closed, that point of time, the auditor can be there and count it, or just watch somebody is counting it and countersign by two person. That can also be there to avoid such fraudulent practice. And in case when it is a straightforward, and when it has happened much before we go for an audit, we have to go through the files and report it as part of, and there is a certificate. There is a RBI guidelines based certificate where we have to report theft, because FIR has to be put in, insurance has to be, it has to be recovered from insurance. So those kind of things we need to keep into consideration. Shivagami, I hope it is clear. No one answered about the bill for discount is a fall in which, bill for collection. Govinda, you said bill for discount is fall in which? Acha, bill discount is purchase. Bill discount is purchase. Okay, bill discounting is purchasing. You're right. It is not bill for collection. It is discounting, means immediately. You are immediately discounting it. Okay, but at a cost. You do not get the full bill. So if you see some customer, when you do a normal audit, if you see they are discounting, that means they don't have fund. That's why they are discounting. Why would a bank give money when they are not sure of whether it will be coming, they will be able to recover? So they discount it. They, for 100 rupee bill, they may not give 100. They might give, 98.5. Rest is their fee. And purchase is that they might, that it depends upon the contract, that they will give a full value, but they are charging something separately for that. And they have adequate collaterals for that. So it all depends on the value of the collaterals, the risk that is taken by the bank under all these governance that we are talking about. All right. So bill discounting comes under bill for purchase. Okay. Loans and advances, huge chapter, right? Huge chapter. I mean, enormous opportunities. So without the bottom line is that without knowing the credit worthiness of a customer, loan should not be given. But you may ask me that there are statutory requirements for giving loan where credit worthiness cannot be, even if credit worthiness is not there, one has to be given agricultural loan. Agricultural loan has to be given. You see, during the pandemic, so much of, deferment is happening for the loan payment. It has to be there. Can't help it, such as situations. But generally, other than the agricultural, even agricultural loans are recovered. There are drives, happens in banks. I've seen in branches where senior officers would go during the harvest time. They will physically camp there for days. During the harvest time, because they know that is the time when the money has come in, cash. And this is the time when they try to recover as much as they can. And you are aware that whenever there is a problem, government comes out globally, I mean, depending upon the areas, globally in the sense that I'm saying for that particular state or particular districts, they declare drought. And the moment that is drought is declared, the loan repayment is waived off. And an auditor before, taking a judgment, he must satisfy himself by looking into those notifications given by government that yes, it is actually falling under the drought notifications, that particular district location. Generally happens given out as part of the district, if not the full state. Generally not the state. Districts of a state are declared under drought. All right. So those kind of things happens. And loan waiver takes place. So loan is very important, and you have seen, and agricultural area is one of the major places, major area where loan waiver takes place a lot and hits the banking, bottom line a lot, but can't help it. But we have to, as an auditor, it is very important to see all agricultural loans not necessarily means for, for farming. There are other loans also which comes under the purview of the agricultural loans related to those. But practically we have seen, unscrupulous operations for waiver. One has to be very careful about that. SME loans, especially SME loans. SME loans, and of course large scale loans, that those are one is aware of. Large loans given to large corporates. Okay, this immediately comes to scanner. One can look into it, scan. But what about the SME loans? If they taken together, I mean that can constitute to a very very heavy amount. Okay, education loan. Educational loan is such. I mean, if together they become NPA, it will totally break the backbone of a bank. Okay, so one has to be very careful about on what basis these education loans are giving. If you are not aware of, let me tell you, education loans say repayment comes, moratorium is there. Why somebody is taking a education loan? Parents do not have that money, but maybe the word is good. He has done, so they are taking loan for their children. Now the moratorium is there that for 4 years, suppose that child or children have gone for technical, qualification or studying. For CA, thank God you don't have to probably take that much of loan. Parents do not have to, unless and until one is going for very heavy, high-end tuition classes. I'm not aware of, but these people going for medical qualification degrees or engineering degrees, they go for loan. And so moratorium is given for 4 years, 5 years, that once the child, that the child becomes a engineer or a doctor after 4 years or 5 years, and the child starts earning, then only the repayment would start. Now, to avoid that repayment, what happens, that person probably is, the child has gone to service, but he is not repaying. He probably is not aware that his father has taken a loan, but father is not able to, service. So many times what happens, the child, they say that, okay, what will happen to that? Will it become an NPA? Ideally, as per the RBI norms, following the norms, if you are not paying, it will become an NPA over a period of time. So that's one case. The second case is, the child may say that we will extend it because I'll go for higher studies. So after BTech, he will say, I will go for MTech. So another 2 years, deferment. Just imagine, after that he will say, I will do doctor, PhD. Doctoral, I will pursue. So another 4, God knows, 4 years, 5 years, 6 years. So this way you see, mind it, he is not repaying, but the interest is going up. And I have seen cases, especially for education loans for children who has gone abroad. Unbelievable amount of loan they have accumulated. So a child, when he comes to know, he starts his career with a loan. All right. So one has to be, so credit worthiness is very important. And it may so happen that parent has given collateral. It is against collateral. It is not free. It's not free loan. So he might have, that's collateral. One can give only his savings, his, property. And after 5, 7 years, 10 years, they will be taken away. So those kind of things are very important. The credit worthiness of the borrower are important. And coming from the advances on account of the education loan or the agricultural loan, now at a high level, like corporate level loans for business, credit worthiness is absolutely important. I don't think I need any explanation, to make why credit worthiness is so very important. All necessary documents, and the proof of such worthiness, credit worthiness. You remember we were discussing about due diligence. Okay, somebody is approaching a bank for 10,000 crore credit line. The bank will be initially very happy. Oh my God, one customer, my business is done for the entire year. But one has to see whether he is really credit worthy to repay that loan. Loan is always to repay, whether it is from, whoever it is taken from, it is to be repaid. So is he credit worthy to repay such loan? And possibly if such, high-end loans are involved a detailed investigation. If not an investigation, due diligence is absolutely must. Okay, which we discussed a couple of days back. So all necessary documents, including the agreements, etc., and things like that, should be reviewed, and all the necessary documents should be executed. They should be, execution is very important. The legal papers, the legal documents, the securitization, the collaterals. The collaterals are having encumbrances. Somebody is having a first right over those collaterals. So can you give a loan on that? No, you can't. What is your share on that collateral? So that has to be clearly defined, agreed, and executed legally. Unless and until it is executed legally, it has no meaning that you said, no matter whatever, wherever you do, it has to be on legal document, legal paper. All right. And generally such large loans are done on the basis of consortium bank. Okay. One bank takes the lead and other banks also join. So consider the leader bank takes all the lead in executing these papers. So when you are, suppose you are doing an audit, you are part of that consortium, but you are not the leader. You are not the leader. So it is very, very important. So you have a say, but you do not have all the say. All right. You have many rights, but you do not have all the say. So you are being governed by that, lead banker. But we must have a copy. Auditor, as the bank has the right to have the copy, one copy of the original copy of all the legal documents. Auditor has all the right to review such legal documents, and to the extent possible, the original copy. Many times it happens, we are told they have not given the original copy. There is nothing doing. We cannot help it. You have to, you see, it is not possible that a consortium bank doesn't have a original copy. They will have an original copy. It may be in the custody of the head office. That's possible. But you at least show it to me. They will say, you please do with the, satisfy yourself with the photocopy. It is up to the bank, the auditor, to decide whether he is satisfied or not. It is always prudent for an auditor to put this in the LFAR if he has some skepticism, some doubt, so that at least the SCA will review the original document. If they claim that the original document is in head office and you are in your hometown, which may be 1,000 miles away from the head office, all right, you are in North India and the head office is in South India. So it is not actually feasible for you to physically go there or get the original copy. Nobody is going to give. So basically it will be good to, mention that in an LFAR, or you can always write a letter, directly a letter to the SCA, because they are our colleagues and we are reporting to the SCA. When a branch auditor basically reports to the SCA, all right, our report goes to the SCA directly, and we can write a letter that, this is a substantial, materially important advance in our branch, but we do not have the legal documents, original legal documents. We could not verify because the branch is claiming that it is in the head office. So this is just to bring to your information, okay, and necessary action. So that will do. This is the way we are doing our good job, but we cannot just ignore it. Ignore we cannot do. Please keep that in mind. All the documents, necessary documents, should be executed and they should be made available for an auditor for review purpose. Okay, sufficient margin. Margin should be there. Collateral we are talking about. Collateral doesn't fetch the same amount of value in the market when somebody is in distress. I'm again speaking from my experience, the land and property and the building, they are showing in such a high value as a collateral and it has been taken. But you take it to the market today when it is in distress, it has no value. Especially the land. It's an agricultural land, and that they have shown as a collateral with a certain value. This is the reason why valuation of property is important. RBI guideline says that the valuation should not be more than 3 years old. That means the value is no more good. So as an auditor, it is our responsibility that we not only check the collateral, but also check the valuation report of such collaterals. Okay, if land and properties are kept as a collateral. Then what is the valuation? Is it the many a time so sad? I'm giving you some facts and figures. What happens? That I don't get to see a valuation report. It is old in a branch, and I'm talking of large branches, and they say, we have missed it, madam. Just wait for a day, madam. Wait for a day. We are getting you the valuation report, and I'm talking of Friday evening. Saturday, Sunday is closed. They said tomorrow, Saturday, you're going to get the valuation report, and a valuation report of a property which is 100 miles away from the branch which I'm talking about. I was stunned. And they immediately picked up the phone. Branch had picked up the phone and spoke to the valuer, and he said, yes, with a lot of confidence, end of the day tomorrow you will get the valuation report. And I was stunned. He was talking to my colleague, to a colleague of the fraternity, and I was stunned. How could you give a report within 24 hours time? I assume you cannot visit that. That means, you see, this will be termed as guilty of misconduct if can be proven. I will not accept. I said, no, please do not hurry. I asked him that will you go tomorrow? He said, no, madam, is it required? I said, it is required. As far as I am concerned, it is required. I need that photograph that you are there. I'm not disbelieving you, but it is for my own safety and for your own safety. The fellow understood. So it's very stock audit. Very rampantly this thing has. Stock audit is old. Stock audit report is not there. Stock certificate is not there, which is supposed to be there every month for cash credits. That's not there. Oh, madam, we have forgotten. We are giving you. Don't worry. Pick up the phone and give that. I mean, you know that the report is there. You just change the figure and give. I mean, this is not right. So that's why I'm saying you this. Why I'm telling you this. In your exam, suppose such statement comes, you have to go through the inner meaning and then decide on the right choice. All right, right choice. So inner meaning that is that we are guilty of misconduct. How can you do a verification and the valuation of the stock so fast? And we are talking of huge stock, and the location is far off. I mean, to reach there itself, probably it will take 3 to 4 hours. So even if you start early in the morning, you have to check this logically. Even if you start early in the morning, you reach there by, you can't start before 6 o'clock, 10 o'clock you reach. And by end of the day, you are giving me, you're faxing me, or you're emailing me the report. And with crores of rupees of stock. A little unbelievable, isn't it? So these are the things we should keep. And based on that, the margin, why a margin is important. Why I started talking. Margin is important because the valuation of the collaterals may not fetch that value in distress. So a margin has to be kept. That if you are giving me a collateral of 100 rupees, probably I can give you a loan of 75 rupees. That margin you have to get. And you need 100 rupees loan. I will not give you 100 rupees loan because I will keep a margin. But I may get only 85 from the market should there be a problem. Rest you arrange from wherever, your source or anything. And if a company sees, if the bank sees that he is not getting any fund and the entire funding is based on, loan, that itself is a trigger that, the in-house housekeeping of the company is not that good. All right. So those kind of things must be kept in mind by the proper authorities. So margins are decided by the proper authorities. Detailed scrutiny of the specific accounts. That's what, by the valuation report, the type of collaterals, whether collaterals are having problems, whether any litigations is going on, or it is also being kept as a collateral with other banks' loan and things like that. Those kind of things one has to review. All the security should be received and returned by a responsible officer. They should be kept in joint custody. And security papers should be kept under joint custody. Could be head office, could be branch, anywhere. And all securities requiring registration should be registered in the name of the bank. That's what we are saying. Securitization. The law is there, okay, that you need to securitize it as fast as possible. And I mean, ideally before loan disbursement, but it takes time. Law takes time it takes its own course of time. So it may not happen immediately before the release of the fund and they are in hurry. So it can be done, but it has to be, timed, that within so and so time it should be, completely securitized. And we have seen cases, I'm giving you again practical experiences. We have seen cases because the securitization was not done, an advance has become a large advance, has become NPA within a year. Quick mortality, we call it quick mortality. An advance cannot become NPA within a year. That means they came with that intention and it was a collusion. And today they are all, some are behind bars, most of them are facing the music of the court. Few are behind bars and few are, and this is not one case. There are hundreds and thousands of cases going on in the country. All right. So it is important. So very, very important for the securitization. And you see, auditor is there. Why auditor cannot do it? We know, go with that skepticism that they are in collusion. They are in collusion, though we should not be bloodhound, right? We should not be bloodhound. We should be careful. But go with that skepticism that there could be a problem. But you identified it. What prompted the auditor not to, report it? That means we didn't do our job correctly, or we are also in hand in gloves with them. Either way, we are guilty. There is no way we can, save ourselves. Okay, so we are at the receiving end. I use this word, statement very often in my bank audit, that if I have not stolen, why should I be punished? And I won't steal. So why should I, adjust for you? Give me a good reason. You have to give me a good reason. Why should I adjust for you? I won't. I have not stolen and I do not want to be a party to a stealing, and I do not want to be, face the music if I have not stolen. Why should I? My logic is very simple. All right. So this way, an auditor should approach. So because I cannot go and say that I didn't check it. No excuse will be heard. All securities during registration should be registered in the name of the bank. Goods in possession of the bank, contents of the packages should be test checked at the time of receipt. Go downs and all, hypothecation. When hypothecation happens, it is very clearly mentioned that the board should be there, that the goods are hypothecated. Even, vehicle, if it's a vehicle loan, anything, they are it is to be notified to the public at large. So why that notice board is there? It is to be notified to the public at large that you see this is based on a loan. Okay, so this is hypothecated. And the bank has a right on that, go down or the vehicle or whatever it is. So hypothecation has to be mandatorily written. And how now, if you can ask me that, madam, is it possible to, go and see if whether that board is put up or not? Yes, maybe yes. I mean, again, when we have taken up a job and the scope of audit says so, say this is done in case of a concurrent audit, yes, we have to ask them to take a picture. With digital, you take a picture and see whether it is today with the digital picture, you can see the date and the time stamp. So you can make out whether it is a current picture or an old picture, right? And if you are very doubtful, well, you might have to go. Okay. So those kind of things. Market value should be checked. As I said, the valuation is very important. As soon as any increase or decrease takes place in the valuation, it has to be corrected. This area is very ignored by auditor. Evaluation for the good advances. What do you mean by good advances? Good advances means that the repayment is correct. Repayment is on time. But it is also dependent, my dear students, on the collateral value. If the collateral value falls, by the virtue that the value of the collateral falls, there is no security on the advance and it can become, not good advance anymore, and it become a bad advance. So checking the valuation of the collateral is very important. Many times we have, why you are checking? These are good assets. I don't know if the valuation is correct. So we can use, why, do you understand when we may say audit planning? And you see, why we use students in this. I can talk about myself. I'm sure I can talk about many other chartered accountants in practice like me. We depend so much on the students because you are knowledgeable, you have the interest to learn, and you will do it what I'm asking you to do it. I will give you a plan, and they will sit and do this, and they do much better job than many of them. Again, I'm telling from my experience that I have got such good outputs from my students during my SCA time, and I'm indebted. And many of them are doing very good work. They are doing They are now into the banking industry, and they are doing well. They're doing well. So I'm happy. They're also happy that they have advanced in their career, and they're doing well in the bank. So it's both way. But the bottom line is that a program should be there, and we must review this. Okay, the valuations and things like that. All accounts must be kept within the drawing power. What is the drawing power? This is for the cash credit. The drawing power, we are talking of a cash credit. So there are two types, basic two types of loans: the term loan and the cash credit loan. So what do we mean by this? The loan which is basically based on a limit, the limit is given based on your the assets, current assets like stock and things like that, and data balance and stock. So, and we decided based on that value of the stock and the data, the drawing power is decided every month. Every month the drawing power is decided and fixed in the system so that they cannot overdraw. And many times it is seen that these are not done correctly, and overdrawing has happened, and they are being given favor. They were favored, for which we said, okay, you at least take the penal interest. Penal interest you must charge so that there is no revenue leakage. These kind of things one should look into. Telegraphic and demand drafts are very important. Demand drafts value, I was telling you that on the demand draft you should have the cash, and then only demand draft should be paid. Issued, not paid, issued. And today they have, a film is pasted on the value figure, where it is written, the value is written on the demand draft so that it cannot be modified. And interbranch accounts, interbranch accounts are very important. Interbank account is also important, that I'm sending it and responding it, and this reconciliation happens. And in my earlier days, when so much of automation was not there, this IBR, DDR reconciliation, demand draft reconciliation, interbranch reconciliation used to be pending for years. And nowadays it is not so. Anything pending for more than 6 months, we need to report. Why are they pending? Probably somebody has not responded, means it will not be received. So we have to look into those, detailed assets and liabilities and things like that, and have to take a decision. So that kind of reconciliations are important. So it is the adjustments are only on the basis of advices, not on the basis of any telephonic conversation and things like that. And of course, reconciliation is important. Okay, credit card operations, these are normal things to be followed. Credit, again, worthiness need to be reviewed. Continuous monitoring should be there. And credit cards is completely, a lot of automation. Why credit cards, even debit cards? They have a detailed level of, high level of automation, where all credit card numbers are kept in a switch, and any problem with a credit card, it is the customers are guided to report it, so that the credit card or the debit card is not unauthorizedly used. Okay, so these are certain things where certain areas which we need to review. Okay, now compliance. So let me go into this. The compliance with the CRR and the SLR. I'm little slow today, I can see. CRR and the SLR. So what is this? The cash reserve ratio. These are the requirements of the Reserve Bank of India. And it is basically CRR is a percentage of the demand and the time liabilities. What is the demand and time liabilities? Demand is the savings that we immediately we can withdraw it, right? And time liability is like, I'm just giving an example, fixed deposit. Okay, over maybe in 1 year's time, 6 months time, it will mature. So the liability to the bank will arise only when the time comes. That's what is called the time liability. And demand liability, where there is no bar on the time. Savings bank, I can withdraw my full balance available in the savings bank or the current account, and can withdraw. So that's the demand and the time liability. So that's a DTL, called DTL. So, Reserve Bank says that a cash reserve ratio has to be maintained, which is a percentage of the DTL. And a fortnightly report goes to the RBI. Auditor's responsibility is auditor needs to refer to the master circular. As I said, master circular, RBI prudential norms are the Bible. Right? So if you see a option comes that the auditor didn't didn't read the, prudential norms, RBI guidelines, or the, circulars, whether he is guilty of misconduct, yes, absolute guilty of misconduct. So from time to time it comes out with the requirement of the percentage requirement of the CRR and the SLR. And SLR is the statutory liquidity requirements, SLR, again given by RBI. Auditors to verify the compliance with SLR requirements of 12 odd dates. Odd dates are given, and this is a certificate has to be given. Here, in case of an SLR, auditor has to give a specific certificate. Okay, so we have to download the daily day book of those dates. Days are mentioned, and those day books are checked, and then we calculate whether it is that ratio is correct or not. And and those odd dates are different dates in a month, in a fiscal year, not being Fridays. Okay, so these are the requirements of RBI. Some more detail of the CRR questions may come. It is a percentage of DTL. Demand liabilities of a bank are liabilities which are payable on demand and time. As I said, it is based on the time period, like fixed deposits. And the overall DTL includes interest accrued on deposits. Overall, the total. So we have to pay that liability also. It is not about only my money, cash, whatever cash I have in current account, savings bank account, or fixed deposit. Why did I keep it in fixed deposit? To earn interest. So the bank has to ensure that the bank will be able to pay me the interest also. Whatever interest, 1%, 2%, whatever, doesn't matter. But whatever the interest rate is, they are capable to pay that interest also. That is called the ODTL, including the interest. Okay, and statutory, the SLR is statutory liquid ratio, or SLR is the minimum percentage of the just a minute, deposits. I'll tell you the difference. Deposits that a commercial bank has to maintain in the form of liquid cash, gold, or other securities. Okay, so keep this in mind, that in SLR it can be in cash, it can be in liquid, that's liquid cash, it can be in gold, and it can be approved securities, government bonds and things like that. It is basically a reserve requirement that banks are expected to keep before they offer it to the customers. The first one is for what is the first one? CRR is basically to meet the demand liabilities, demand and the time liabilities, and this is a reserve. This is a reserve which they must, so that liquidity is there, maintained. Liquidity is maintained in the economy. Whatever money they have, they do not give it to the customers as advance. No, this liquidity must be there for contingency. What happens in case the customers cannot repay? They will say that, okay, it cannot happen that 100% customers cannot repay. It happened. Look into the countries like Greece. They are broke. Okay, they came out they had to appeal to European communities to bail them out. So whole lot of things, they go with countries, they break because of poor economic banking, monetary policy. So RBI says that you have to maintain some SLR so that your liquidity is maintained in the market, and before credit is offered to the customers. It is basically the reserve requirement that bank is expected before it goes out to the customer. Determines the amount of money bank needs to invest in certain specific securities, like in gold or government bonds, which are predominantly securities issued by the central government or state government. RBI fixes the limit. RBI fixes the limit. It cannot, the moment this SLR, CRR goes below that limit, it gives a trigger. It's a very warning. It's a very severe warning that the banks are not doing well. And it has to be, of course, reported. It needs to be qualified. I mean, if it falls below that rate, it calls for a qualification. Straight away a qualification, because it's a compliance. All right. Difference. So difference, I mean, rate is not important for you immediately. It probably is, CRR is 5% and 9% could be the SLR. I'm not sure exactly. I can let you know later. Difference is that CRR is maintained in cash and SLR can be maintained in cash, gold or government bonds. All right. That's the first difference. It has to be maintained in cash. And the reason for CRR is to meet the time and demand liabilities, and SLR is for maintaining a reserve so that they are required, they are used in case of an emergency. And also economy as a whole, country as a whole. Interest is earned on SLR and not on CRR. Please remember the cash is kept with the Reserve Bank of India. For the demand and time liabilities, it is kept with, it can be kept with bank, it can be kept in the Reserve Bank, and there is no interest earned on this CRR. But on SLR, some interest is earned because it is in government bonds. Anybody can purchase that bond, right? So bank is also purchasing that bond, and whatever interest is offered through those bonds, the banks can earn that. CRR regulates the flow of money in the economy, and SLR ensures solvency of the bank. Okay? So solvency of the bank. That's what I told you, that the country Greece, broke because they didn't have enough right kind of monetary policy in place. So SLR can go to such a level where a bank can go to the insolvency state. And the CRR is the money is available. Money is available. So, I mean, anytime a demand comes for customers to withdraw the money, the cash is available. CRR is maintained by RBI, but RBI doesn't maintain the SLR. Okay, but it can be kept. Gold can be gold. It can be kept with the, and bonds can be issued by central government bonds, RBI bonds, whatever. But CRR, cash, is maintained with the RBI. The liquidity of the country is regulated. Both is by the CRR, while SLR governs the credit growth of the country. Because credit is important. One cannot do business on the cash basis. It cannot happen. There has to be a credit, in the market. So adequate, the more the credit would be there in the market, the companies can invest. The company can invest, the growth will be there, economy will grow. But at the same time, the balance should be there so that cash is available. Cash is available in the economy, so for immediate consumption by the consumers, by the customers. We cannot only deal in credit cards and debit cards, can we? We need cash. We need cash, and that is ensured. We have keep cash in savings bank and fixed deposit. Okay, and we can withdraw that in the time of need is maintained through CRR, and SLR is for basically the industry as a whole, for economic growth, general economic growth of the country. That business will increase. So that's all about the CRR and SLR for your exam purpose. Some verification asset. Whether one has to review the own cash. I mean, this is simple, that we have to verify cash, whether you are a concurrent auditor, statutory auditor, whatever, and what balance is lying with the Reserve Bank of India. If such cash is kept, we have to get it a certificate from there, right? We have to, or some cash is kept with some other bank, balances with the other bank, certificate, original certificate needs to be taken, and money at call and short notice we have to get and verify it, that this money can be actually available in a call and short notice, immediately available with the bank in case the requirement arises. All right. Simple things. Investment, internal control, evaluation and review of the investment policy. The portfolio. So there is a portfolio, investment portfolio, in which the bank has made the investment. So what was the policy for such investment? Because this is handled by a separate a vertical in a bank. So it's a huge area of opportunities And misutilizing opportunities for personal gain. We have to be very careful. Investment is in wrong places at wrong, timing. So policy should be there. Okay. So we have to ensure that that vertical investment, department, the people, we have to review the entire thing. What kind of people are there, what kind of control mechanisms are there, whether they are continuously monitoring, those kind of things. So auditor, SCA, who is specifically doing the job for the investment balance, he is responsible for all this. Separation of investment functions. I'm also settling. Those kind of things are very, very important. Examination of the reconciliations. We have to get, today you don't have the physical scripts, right? So we have to get from the NSDL, but it is important to physically verify, in the sense that we have to get a certificate from the NSDL that what are the investments lying in the portfolio as on the close balance sheet date. And the physical, that's what physical verification, reconciliation, how did it arrive at, in case it is required. And special purpose certificate relating to investment is auditor has to give. That's why I'm saying one particular auditor is given this responsibility to look after that investment, and that auditor is generally not given much other work, because this is a heavy duty work. It's a completely different thing. One has to know a lot about it. So special purpose certificates are given by the auditors relating to investment and examination of classification and shifting. Whether investments are available, investments are for or on sale or held to maturity. These classifications are important. When I'm talking of classification, what these classifications are? There are two type of classifications. These are available to sale, available for sale, and held to maturity. These two classifications are there in the balance sheet. Okay, as far as investment is concerned, some investments are classified as available for sale, and some are kept as classified as held to secure maturity. So this classification shifting is also happening. You cannot be rigid that something which is held to maturity is shifted to available for sale. But we need to review. This reconciliation has to happen. What was, held to maturity till last year, and what are the investments made afresh during the financial year, classified as held to maturity, what matured during the financial year, okay, and what was shifted to held to available for sale. This reconciliation is very, very important for an auditor to do. Okay, so it's a very fairly tough task. Okay, examination, self-certification by the bank has to be given on the portfolio management. Question would come, portfolio management, services. Banks do portfolio management services. I'm sure you are aware of. So these certificates are required for not only those who are into portfolio management certificate, but also for their own investment. Bank is having their own investment. A certificate is required for that also, apart from those who are into portfolio management services. Please keep this in mind, that certificate has to be there, and auditor naturally reviews that. Okay. RBI, as per the RBI guidelines, banks are required to get their investment under PMS separately audited by the external auditor. So who are into the portfolio management services, that part of the investment has to be reviewed, because that's not your own investment. I'm sure you're understanding the difference. Portfolio management system vis-a-vis your own investments, bank's investment. They are two separate things. So that has to be audited separately by the management. By the auditor. Has to be prepared by the management and reviewed by the auditor. Advances and NPAs are again a very serious thing. Evaluation of internal controls over advances, which I told you. I will not go into detail. We need to have substantive audit procedures. How much we rely on the control. This is an area where we have to do substantive audit procedures. Now, where do we apply that? Do you go by, here the question, tricky question may come. Where will you apply the substantive testing? By reading the documents, reviewing the documents. Documents, you cannot have a test of control. Balances, balances, figures, you can have test of control. A procedure, you can have a test of control if the procedure is correct. Like, example, interest application. Interest is applied every month on the advance balances. So there you can have a test of control. You came to know that the control is that the system automatically applies interest on the last day of the calendar month. This is the control, very good control. But what test you will do? You will actually take a dump of the interest and see whether it has been applied to all the customers en masse, on that last day. And maybe sample check some calculations. Sample check some calculations. That will be good enough. That's the test of control. But, whether the creditworthiness on an ongoing basis of a customer remains the same, that cannot be done through test of control. That has to be a substantive testing. The certificates that he gives, say he has taken a cash credit, the monthly stock statement that he gives, the periodic stock audit report that he gives, the periodic, debtors balances which he gives, audited by chartered accountant. These things cannot be done through test of control. These has to be reviewed, by the auditor, substantive test, through a process of substantive testing. We cannot have cut corner on that. Okay, so that's the reason we are saying about substantive audit procedures, not to get confused for the exam. Recoverability of the advances, we need to see the creditworthiness, and here we can have some test of controls. You download the passbook and review that whether it has been, recovery has been continuous, and we cannot check only 1 month, last month. It has to be for all the 12 months. And if it is downloaded, and here an audit tool as simple as Excel can be used, this can be done in no time. Okay. And classification of provision and classification and provision, whether a asset is good or it has become an NPA. Then NPA has a lot of classifications. First year NPA, second year NPA, and then it is a substandard asset, a doubtful asset, then it becomes a loss asset. Accordingly, its, valuation comes down. If you see that the valuation is not there, it immediately gives rise to a case of becoming a loss asset. I'll give you an example. A cash credit advance has been given, and for some reason or other, because the borrower could not pay the the bank on time, the interest was not serviced, and it failed below the RBI norm. It became NPA, but it became substandard year 1. The moment it becomes year 1, so it is become substandard is the classification first. Now, whether it will be a substandard or a doubtful or, loss, that we need to see. So, the moment the asset becomes NPA, the collaterals like the primary collaterals here is the stock and the receivable. Stock and receivables is taken out. Because if the company doesn't have a business, their current asset has no value as far as the bank is concerned. Okay. So they immediately remove that, and then they go to the other collateral which they have given in form of, say, the other collateral like plant and machinery or the land and building. Then they look into that. What is the valuation of that? So if you take that valuation, is the advance being, covered? Is the advance covered? If it is not covered, and as per the RBI norms, it is below certain threshold, it might have to be classified as a doubtful or loss asset. Suppose they don't have any other collateral. Suppose when it can become a loss asset on year 1. Generally over a period of time it becomes doubtful and loss asset. But many times it happens that on year 1 it becomes a loss asset. Simple reason, no collateral, no security. The moment there is no security on day 1, it can become a loss asset. And loss asset means 100% provision. The classification, please remember for your exam purpose, my dear students, classification of advance is important because of provision. For your purpose, please remember provision is not only made for NPA assets, it is also made for standard assets, a floating provision. A floating provision is made on the standard asset also at a lower rate, 1.52, whatever is the rate maybe. Okay, but at a much higher rate when it becomes NPA. But so these classifications are important for provisioning, and you can well understand what provision, correct provision, accurate provision has impact in the balance sheet, direct impact in the balance sheet. Okay, it can bring the balance sheet to a red figure or or otherwise. So you see what is happening. When the norms changed, when the RBI norms changed during the earlier governor's regime, and the RBI norms changed, the classifications of advances became completely different and the provisions increased, and most of the banks were into raid. It was a corrective time. The banks corrected themselves. Now if you go, you will find any scope for provisioning and things like that, because that has already been taken care of. All are done. Okay, they have started afresh. It was required. And drawing power calculation, as I said, if the primary collateral is falling below the amount of stock and the amount of the debtor balance is not good enough, the drawing power will reduce and reduce accordingly. It has nothing to do only with the limit. Even if somebody has a 1 crore limit and the conditions, the loan covenant says that you also have to provide 1 crore worth of stock and debtor balance, and 1 month such balance is given as 50 lakhs, the drawing power will be reduced to 50 lakhs, even if he has a credit line of 1 crore, doesn't matter. Alright, so you please remember for your exam purpose the implication and seriousness of the drawing power calculation. Limits not reviewed, very serious offense. Okay, yearly the review should be done on the limits, how they have performed. Okay, and this is RBI guideline that it has to be reviewed and corrected. Government guarantee and advances. Yes, collateral. I must tell you for your exam purpose, please memorize this. Central government guarantees can be taken as collateral, as a guarantee, as a security. State government guarantees are not considered as security. For your exam purpose, remember this. There is no why, when. This is the reason. This is not the reason. This is the rule. Central government guarantees are considered as securities. State government guarantees are not considered as securities. So when we calculate review the security part of it, the collateral part of it, we have to consider this also. Okay, keep this in mind. Some more agricultural advances. I told you a lot. Provisioning towards standard assets, I just explained. Restructured advances, including the corporate debt restructuring, which we have seen in the last several years, last 10 years, this scheme is now almost closed, but they are now giving the result. Where the borrower could not actually started refunding after the moratorium, especially for the term loans. After the moratorium, they failed for genuine reasons and many for not genuine reasons. Alright, they didn't utilize the funds for the purpose for which they were taken. They were diverted, fund diversion. It may not be a money laundering. It could be money laundering. It could be just fund diversion for personal gain. Alright, so those kind of things were there, and because of such reason, now what to do? What the bank would have done? They would say that you write off. It's not possible. The bank would have, wind up their business. So they offered restructuring of the advances, given them some time. They basically given them more oxygen to survive. Many utilized, many failed again. Many passed, many actually they revived their business with the restructuring. Part of the restructuring, it was there. The management will also change. The management cannot be the same management, So RBI came out with guidelines that if it was so bad, and we need to put in the management people from the bank or as nominated by the bank or the central bank here, the Reserve Bank of India. So restructuring advances, including the corporate debt restructuring, was there. Upgradation of accounts. Many times it happens that they all are not bad borrowers. So many times when they make the payment from NPA, it can go to again good assets. So upgradation. So as an auditor, it is very, very important for an auditor to review the cases of upgradation. They just want to hope it is not in window dressing. They just give, or to avoid the provisioning. They are not doing this for avoiding provisioning. One way of avoiding provisioning, straight away provisioning, is to upgrade an account. Right? So upgradation needs to be reviewed in detail. And reports are available. Why I said an auditor need to review, the understand the business processes, because these reports are available in the system, and an auditor has to go and take this and then do his audit. Audit procedure for accounts falling under CTR. Again, in corporate debt restructuring also they have failed. Then what to do? Okay, then it is taken over. Various other acts starts coming. Proceedings against the company may start. The entire asset of the company can be taken over for sale, so that the maximum recovery can be done. A whole lot of things are there. Okay, for your exam purpose, these are important. Fixed assets, simple things. Internal control should be there. Premises and valuation are very important. Other, okay, so these kind of things like premises should be valued. Location should be identified. The other auditor's report will give you actually that premises are there, land and buildings are there. So those kind of the existence are important. Physical fixed assets. One of the component is the existence. As an auditor, it is very important for us to know the existence. And fixed asset register is very important. Key here. If something is in the fixed asset register, it means that it is, it is existing. Even if it doesn't have a value, it is in physically existing. So those kind of things, how often do they physically verify? And as those who have done branch audit, you will be able to recall, there is a certificate which a branch auditor has to give only for the physical existence. Otherwise, how a central auditor will know that whether these are existing or not? It has to come out from the branch auditor. All right. So the branch auditors or the self-audit done by the audit branches which are not falling under branch audit. Okay. Concurrent audit report, etc., or internal inspection report, etc. So, but we have to give a branch audit. We have to certify, these are physically there. That's all. We don't have to think of the valuation. Only the physical existence. And these report, they will take out a report from a HO and send it to the auditor that you please check these are in the physically whether these are available. Many fixed assets may be on lease, maybe on hire in a branch. So the one which are on hire will not be in the fixed asset register, isn't it? So again, in the fixed assets, the lease assets and the actual fixed asset needs to be classified. So the report is generally sent by the HO, and a branch auditor merely checks the physical existence of it. That's an important area. And including all fixed assets, sale of fixed assets. How a sale took place? Through proper, audit procedures. How the accounting entry took place for the sale, whether the profit and loss on sale of such asset, gain and loss on such asset. Leased assets, as I said, they need to be classified separately, because we need to look into the lease aspect of it also. That what leases, what lease payments are being made, interest and etc. So they need to be clearly identified. Fixed assets what are the assets under lease assets, lease also. And impairment of assets are very important. They have to tell us that this is generally taken at a HO level, that what procedures the bank has identified to ensure that there is no impairment. And if the auditor is happy with such, such procedure which the management has actually taken, he may decide to say that impairment has been taken care of, but we need to report that there is no impairment of the asset. Otherwise, we have to take into consideration the impact also. Okay. Other verification, inter-office adjustments, interest accrued, very important. Interest accrued but not due, those sort of things are to be checked, but they are, because for accounting purpose, they need to be accounted for, but they should not be in the customer's balance, because they are not yet due. It will be due only maybe 15th of the next month, but we have to have a cutoff on 31st March, because 31st is our balance sheet date. So interest accrued and due, interest accrued but not due. So these are the things which we have to very clearly review. Tax paid in advance, tax deducted at source. Wherever possible, payments made from the branch offices, whether TDS has been deducted. Advance tax is generally taken care of at the HO, but nevertheless, whoever is the tax, HO auditor, one has to review the advance tax also. Stationery and stamps at branch level. whether they are, the stamp papers and things like that are under the dual custody. Otherwise, there could be a problem. Non-banking assets acquired in satisfaction of the claims. These are not banking assets, but they have been acquired because they couldn't be because the borrowers failed. The borrowers failed, and then generally what happened? They sell it. But so these are non-banking. Some of the non-banking assets. Okay. Okay. They're holding it, maybe for the court cases are going on, etc. Ownership the property is legally vested with the bank. That's very important in case of, that's what I was looking for. Non-banking asset, it has not been purchased by the bank. Please understand, it has not been purchased by the bank, and it is not, but they have acquired it because of some fallout from the borrower. So the ownership has been transferred to the bank. It is to be taken note of. A suspense account, and I told you several times that many balances will be parked in the suspense account, but they need to be, cleared within a given period of time. System that I know of today, it has been, incorporated into the automated system, whereby during the day end, all suspense accounts are zeroized. They do not wait. It cannot happen that you do not know the GL code. So the day end will not close unless and until the suspense accounts are closed. This is a very risky area, and this is an area where through which fraud takes place. I'll give you a small example. A borrower whose due date has fallen to service the interest is not able to service the interest, and they have come to such a stage that if they do not service it this month, it will become NPA. So they will approach, they might approach, and I'm giving you live examples. They will approach the branch. They say that we are such a, borrower with you, and could be a genuine reason. It could be a genuine reason. It is an emergency. They are otherwise a good customer, good borrower. They will approach. They say that we don't have the money. We do not want to, neither you, the bank want, nor we want to go into, downgrade our advance. Please accommodate us with some money. End of the day, probably we will be able to, refund it. We will be able to refund it. So day adjustment, it is just an accounting adjustment of passing that accounting entry that the interest has been serviced. That's all. After that, you take out that money. So where from that money will come? The bank is accommodating the borrower by giving from their own fund. So where accounting entry will happen? The accounting, so the credit has to go, the debit has to go into the customer account. Where the credit will go? It will go into the bank's own account. Okay, so, or vice versa, or vice versa. So keep that in mind. These kind of things happen. That the bank, if it is an advance, it's the other way around the accounting entry. The bank customer will be, credited, and the bank will be debited. So they are accommodating the borrower with the help of their own money, and parking that accounting posted in a suspense account. So it is important, and RBI gives that guideline that please review the suspense account in detail to identify if there is any possibility of fraud had taken place. It might be that fraud had already taken place, and it can come out into light after you do the ledger scrutiny. Okay, miscellaneous debit balances and government accounts and things like that one need to see. Capital. The capital adequacy, the verification of balances now into the liability side. The asset we saw, capital adequacy is that whether the bank has enough capital resources in relation to the risk associated with its operations. That's important to keep a note on that. The basic approach of capital adequacy framework is that a bank should have sufficient capital to provide a stable resource to absorb any losses arising from the risk of its business, whatever it could be an operational risk, it could be, risk coming because of some failure from the borrowers, the operation, have failed. Say, for example, the IT information technology, there is a failure. It could be risk arising from any of such failure, but there is a loss. There is a loss because there is a failure in IT. You need to one has to buy new products probably, or if there is a failure for a borrower, one has to absorb such loss. So it is a loss. So whether they have enough resources, capital with them, reserves with them to absorb such losses arising from the risk in the business. And the capital, the CRR is decided by central banks and bank regulators to prevent the commercial banks from taking excess leverage and becoming insolvent in the process. So capital adequacy ratio, the capital and liability in India, the scheduled commercial banks are required to maintain the capital adequacy ratio of 9% today. While Indian publics, the PSUs, the scheduled banks have to maintain 9 and the PSUs have to maintain at a 12%. Okay, that's the current RBI norms. It is arrived by dividing the capital of the bank with the risk-weighted asset. Here the Basel comes. Here the Basel comes. The risk-weighted assets. How do you assign? I hope you are listening carefully. This is where you are actually attaching, giving weightage to the risk. And RBI has clear guidelines. Basel has given clear guidelines how to calculate that risk. For each asset, how the risk will be calculated and the total value of the risk-weighted asset will be calculated. Naturally, this cannot be done manually. An entire thing is automated today. So we have to certify this as an auditor, branch auditor and a central auditor. So it is important not only that we know not only that we must know these details, we must know how to check that even on a sample basis. On a sample basis. Say, for example, how a weight is given to an advanced customer based on his credentials. So the rating agencies are so important. Rating has been given B++. It will have a certain weight, and if it is unrated, it is 100% risk. That meaning if you see a borrower who is a private limited company, that means not rated. It's a borrower is 100%, is a private limited company. Whatever borrowing is there, it is considered as 100% weight, that there is a risk associated with it. On the contrary, if it is a limited company and is AAA is the rating, there the risk weight will be much less. Alright, so the risk attached with the advances given to that borrower will be much less than that is given to the unrated borrower. Okay, this is the way the total risk weighted borrowing asset is actually calculated. This is calculated and that is then divided with the capital is divided with the risk weighted asset to arrive at that percentage. And when we are talking of the capital, what are the components of the capital? Let's look into this. If you have any question, do ask me, please. And when we are applying in the tier 3, when we are applying risks to the asset, we are talking of the credit risk, the market risk, and the operational risk. Okay, and the RBI is now putting more stress on this, the operational risk, the risk management part of it. If the risk is managed well, the weight will be less, and naturally the risk associated with the borrowings will be less, meaning that the recoverability, the possibility of the recoverability will be high. The more risk, less possibility of recoverability, and the percentage will go down. The capital adequacy ratio will go down. So the risk is more, the capital adequacy ratio will go down. The less the risk associated with the borrowings are the other the assets, the risk the capital adequacy ratio will be high, and the condition of the bank will be defined as in good condition. Solvency will be there, it not be in insolvent state. All right, is divided into tiers. Okay, so tier 1 capital consists of share capital and disclosed reserves, and is a bank's highest capital, the one you issue at the, which you get to see at the top level of the under capital. So disclosed reserves and the share capital, of course. And tier 2 capital consists of certain reserves and certain types of subordinated debts. the loss absorption capacity of the tier 2 capital is little less than the tier 1. Tier 1 is that you have that money, liquidity in place, but tier 2 consists of certain subordinated debt also. Reserves and surplus, capital reserves, share premium. Share premium is actually in hand. So that is part of the tier 1 capital. Revenue and other reserves including investment fluctuation reserve and balance in the profit and loss account, of course. Revaluation reserve. Okay. So those kind of things are part of the reserves and surplus. Many a times, the capital, when they're coming down in the capital adequacy ratio, they start revaluing the asset. It's a good, and they will get a huge, reserve from their revaluation, asset revaluation. Okay. And let me see if I have missed out something here. If you have missed out, you must point me out in the question answer and then we can discuss. Okay. Deposits, current account and savings account, popularly known as CASA. Term deposits, deposit designated in foreign currencies. Interest accrued but not due. And know your customer norms. I mean, this is applicable for any, whether it's a borrower or a depositor. Knowing the customer is absolutely mandatory. And I'm sure you are aware that RBI penalizes. RBI penalizes if 100% KYC is not done. All right. So those kind of things are there. Penalizes, and auditor finds out the internal control. If you see such penalties have been charged, and it is part of the profit and loss account, so it is easy to find out from the trial balance also. So CASA account, what you check basically, who's depositing, how much is deposited, interest is calculated correctly, and things like that. Terms deposits also, as per the governance or the norms, how they are deposited. Deposits in foreign currencies if required, some based on the norms and requirements, and interest calculation, accrued but not due. As I gave you, 31st March, it need to be, the balance, the account, it may not be available in the customer balance, but it has to be accounted for at the closing balance. Balance sheet date, which is 31st, that's interest accrued but not due. All right. So be very careful about this for your question. The tricky question may come. Okay. And deposits receipts, the FGRs, in case of fixed deposits, receipts are given. If somebody loses that receipt, duplicate, how do you give the duplicate? It's very easy. I mean, you know that you have to take an indemnity. It is not so easy to give a duplicate fixed deposit receipt. Those sort of things must be kept in mind. Ledger balances, subsidiary ledger balances must be tallying. It has to be checked because it is directly related with the customer balance, which is a sub-ledger, and total is the CASA. So they should match. Sub-ledger, ledger. These are the basic audit that we need to carry out. Okay. And because why know your customers are important? Because money laundering takes place. As I said, this is the route through which money laundering is done. So knowing the customer is very important. Why he is having a account, what kind of business he is having, whether it's a deposit, huge deposit he is making. Why? I mean, what is the source? So it has to be probably looked into. And what one can review it the moment that KYC is, filled correctly and recorded in the system correctly. Some more deposits, borrowings in India, Reserve Bank, other banks, other institutions and agencies. It's possible that banks are borrowing from Reserve Bank. If they don't have adequate money, they can borrow from other banks. They can borrow from other agencies and institutions, and borrowing from outside India also is allowed to the extent it is allowed. Okay. Bills payable. Just a minute, my battery is down. Bills payable, inter-office adjustments, interest accrued. If the interest accrued, it should have been credited to the customer, and provisions if any required. Okay. Bills payable again. I mean, this is, you remember bills, it has come, you have to pay it. So draft, mail transfers, checks should be made out of the standard. These are the bills payable related, product through which you can make the payment. And so unused form should be kept under lock and key, dual lock and key. Bank should have a reliable private code known by to the responsible officials of the branches for handling this. And signature for the demand draft should be checked by the officer with the specimen signature book and things like that. These are simple, small things, but needs our attention. Okay, needs our attention. Inter-office or inter-branch adjustments, as I told you in case of advance also, this needs to be looked into. It will have a both side, because you have to remember only thing one. If it's an asset for one branch, it has to be a liability for the other branch. Okay, keep that in mind. If it's a liability for the bills discounting is liability for one branch, it has to be an asset for another branch. So that way it happens. Contingent liability. Contingent liability is claims against the bank not acknowledged as debt. These are, litigations, local, LCs, letter of credit, letter of comfort. As I told you the other day, letter of comfort is completely stopped after the PNB fiasco. So it is illegal now to give a letter of comfort. Bank cannot give a letter of comfort. It can give a letter of credit. So it's basically funded and non-funded, and they must be reported as contingent liability. And liability for partly paid investments, liability on account of outstanding forward contract. Yes, forward exchange contract. It will quantify one day, but not today, but that it is based on a forward contract, not on a spot basis. So forward contract. So this has to be reported and reviewed. Not only to be reported, but it needs to be reviewed, because the contract has to be reviewed to see whether you can always comment that whether it was imported from India and has to pay. So the payment will be released by the bank in a foreign country to the customer who has sold, who has exported, and the payment has to go from an India branch. So between these two branches, they must have a, kind of an agreement and reliability. So those guarantees, so they are giving a guarantee that if the money is not paid by the customer who has purchased it, the bank will give the guarantee that I will pay you. I will pay you. So based on that guarantee, the bank in the foreign country will pay the customer. Those kind of things happen, So within India and outside India, this also has a, but within the framework of the RBI guidelines, acceptance, endorsements and obligations, and other items for which the bank is contingently liable. It could be any other case, any other normal case that can happen in any organization, including the bank. Okay, keep that in mind. Unused LCs, these acceptance, endorsements and obligations, these, custody over the unused LCs are very important. One has to keep in mind, and one has to keep in mind the, you have gone through it, or you will be going through the accounting standards also, about the provisions, contingent liabilities and contingent assets. Standards are there, so you need to review, go through that also. For your exam purpose, keep that in mind. These are guided by those accounting standards also. Okay, and disputed other, when we are talking of other cases of contingent nature, various disputes, claims against the bank, tax demands, those kind of things. Okay. Bills for collection. Bills for collection is that ensures that the bill drawn on other branches of the bank are not included in the bills for collection. So, bills payable, bills for discounted bills, bills payable, bills for collection, these has to be very carefully noted that they are not merged in, same thing is not getting mingled in two locations, two account balances. Okay, though this is not an account balance really, this is not an account balance, let me correct myself, this is a contingent liability in nature, but so bills for collection, you are holding it, you have sent the bill, you remember we discussed, it is not discounted bill, it is not a purchase bill, so you have sent it for collection, but you are holding it into your liability will come when you get the payment. You have to pay. Okay.
Ma'am, we need to wind up. You can continue for 5 minutes more. Then in 5 minutes we need to wind up because we are already 5 minutes.
We are also, yeah, I'm done. I'm mostly done. I am done.
Okay. Then I think
Yeah,
we can wind up, and the remaining topic we can cover on Thursday.
we will cover, and I'll probably I'll give some case studies from the bank. If time permits, I'll give some case studies from the bank also. So bills for collection, and if you have question, and the last slide is basically on concurrent and audit committee. I didn't mention in detail. I don't have to mention because audit committee is the requirement, SEBI requirement and Companies Act requirement where it will be there. Where an audit committee is required. So we will have separate, since you will have separate classes for that, it applies to the bank also. And concurrent audit is a requirement of the bank. That's so that they can have a continuous audit, because a branch auditor or the statutory auditor, the year-end auditor, do not have so much of time. And from the bank's perspective also, the bank may not know where they are losing out. As I said, in case of the bank, I mean, we cannot only have the post-mortem audit. It has to be on a continuous basis, and hence the concurrent audit is very, very important. Revenue leakage. If the revenue leakage is happening, so it has to be stopped immediately. If it is identified on a second month of a concurrent audit, so the rest of the 10 months, probably the same revenue leakage won't happen. If the concurrent, on the other hand, if the concurrent audit is not there, this revenue leakage could have happened for the 12 months. So you can understand the difference of the, difference between the two and the impact of the loss, revenue loss in such cases. So the concurrent audit is important, and audit committee, we will discuss for the company audit. And so probably for the last 1 or 2 slides, I rushed a little, paucity of time. But please, dear students, if you have any question, any difficulty in understanding in any of the areas, please post your question. I will answer it. I will write the answer, and I will get it. I'll make it sure that you get it through the board of studies, or later on, when I have other class, I can also come and tell you there. But definitely I'll answer. So if you have any question on these, do let me know. Let me just give me 2 minutes, Karuna. Let me see if I have any question here. Not much of question. COSO framework. Mukesh, ma'am. Okay, only one question. Mukesh, I didn't see this. Please be there in my next class. I'll tell you about the COSO framework, which we probably, you were not there in one of other classes. I have explained COSO several times. I will again explain COSO because
he can go through the recorded lecture. It's there. So he can see that.
Right. Okay. Yes, Mukesh.
And after watching the same, if he is having any doubt or query, then he can definitely pose.
Correct. Yes, Mukesh, this is a recorded lecture. So you go through it, and if you still having a problem, post a specific, question relating to COSO. I will definitely answer that, because COSO is important for you to understand the internal control, which is the fundamental base work for an auditor. I agree completely. Mukesh, you please understand properly through the lecture. If you cannot, post separately, post in that box. I will answer you in detail, as much detail as it requires. Not to worry. Okay, I'll ensure that you understand this. Thank you very much. I think we have come to the end of this session. If you have questions, do post it. I'll answer them separately. Not a problem. So let's wind up today. Thank you very much. Have a good day, students.